And then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Thursday, September 2nd. Can I try that again?
It's not Tuesday. It's not Friday. You can try it again.
It's
one
Thursday.
Of those days, though.
Yeah. It's Friday's Eve. It's Jobs Eve, Jobs Report Eve. And I have to say, there's so much going on in the world. We're all trying to deal with certainly that big storm overnight here, Hurricane Ida, really impacting a deluge of water in the New York metro area.
Yeah, not just New York City, but of course Philadelphia as well.
Tornadoes in
many
New
parts of
Jersey.
New Jersey, the Bronx, my home area of Brooklyn. I was up pretty late helping a neighbor, digging out some water, but we also have multiple deaths reported, and our hearts are certainly out to those families who have lost loved ones. But this is a story about what is happening in the environment right now, Carol. It's a story about extreme weather, and we're going to dive into it later.
Right. We're going to talk about that. We do have quite a program coming up, folks. We will talk about Ida. We'll talk about the West wildfires, another thing, another incident when it comes to climate change. Vail Resort CEO Rob Katz, he's going to stop by. And yes, we're going to talk about C-suite changes. We're going to talk about the outlook for the business. But he, too, and his team have been helping out with those wildfires.
Yeah, the Caldor Fire in California near the Heavenly Resorts. Also, Carlisle's David Rubenstein is joining us live in the studio on his new book, The American Experiment. I'm looking forward forward to speaking with him about all that and more.
It's so timely. All right, let's get you going, though, with a check on that trading day, because we are definitely off our highs, Charlie Pellet.
Indeed, NASDAQ just turning negative. The Dow, the S&P, they are pushing hard, but right now I'll give you the numbers. We've got NASDAQ down 3 points now. Little changed. S&P higher by 3, also little changed. Again, though, well off session highs. The Dow up 68, higher by about 0.2%. Stocks almost erasing gains as a drop in tech shares offsets an advance in economically sensitive companies ahead of that jobs report tomorrow morning. 10-year yield right now 1.29%. Gold down 0.2, 18.10 the ounce, and West Texas Intermediate crude up 2.4%, 70.23 a barrel. Briefly, couple of other developing stories. The FAA will not allow Virgin Galactic to fly pending an investigation. Virgin Galactic's spaceship carrying billionaire Richard Branson and others deviated from its approved flight path on a July trip, prompting the FAA to open an investigation. Ticker SPCE Space down now by 5.5%. Also, Walmart raising wages for a big portion of its American workforce, bringing its average hourly wage to $16.40. Walmart up now by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Let's get to the Market Drivers Report. And let's set the Business Week agenda on this Thursday, September 2nd. Dave Wilson, stocks editor at Bloomberg News. He's on the access line in New Jersey. Reed Pickert, U.S. economy reporter at Bloomberg News, on the phone from Washington, D.C. Dave, let's kick it off. First of all, you're home. I'm hoping your family's safe and sound, though.
Yeah, basically fine. You know, just a touch of water in the basement. Nothing like I've seen elsewhere. Even my sister out in Pennsylvania is having issues with it. So we've been pretty fortunate here, though.
I know mass transportation, though, was really shut down, certainly the subways, and it was tough getting in and around. So we're glad to hear that you're safe and sound. Tell us a little bit about the trade, if you will. It's a funny one. We were up, and now we're moving down. What's going on?
Yeah, I mean, things are kind of settling out, arguably, before we get the jobs report tomorrow. And, of course, with the long weekend coming up, no trading on Monday. You know, there's reason for people to kind of sit back at this point and kind of let things take their course. I mean, when you go through the 11 main industry groups in the S&P 500, though, I mean, you do see gains among the more economically sensitive areas of the market. Energy stocks by far the best performers. You got crude oil back above $70 a barrel in New York trading, so that helps. You see industrial companies, raw material producers, financial shares all higher. But some of the groups tied into technology not doing so well, whether we're talking about information technology as such or communication services, where you find Google's owner Alphabet, and now there's the potential of more government action against that company, so you can understand why there's a bit of weakness there, just off a bit more than 1% in Alphabet, but enough to kind of bring things all together back to not much direction.
Reed Pickert, come on in here. You're U.S. economy reporter for Bloomberg News, joining us on the phone from Washington, D.C. U.S. initial jobless claims coming in today, as it does each and every Thursday morning, but declining this morning to a fresh pandemic low. Applications for unemployment benefits dropping to 340,000. Give us overall, though, the picture that is being painted by the economy as we get new and new data each and every day, and then, of course, as we await that August jobs report tomorrow.
Yeah, absolutely. So initial jobless claims, as you said, they really continued their downward trend in the data that we got today. But as we know, that only gives us one side of the story. To get a sense of the pace of actual hiring, we'll have to look to tomorrow's jobs report. And what data has shown us recently, at least looking at high-frequency data, is we saw a market slowing across a variety of metrics, from hotel occupancy to open table bookings, from the survey week in July to the survey week in August. So with that in mind, economists are expecting to see 725,000 jobs added in August. And while that is still a solid print, it's definitely a deceleration from the back-to-back 900,000 plus gains that we got in June and July.
So, Reed, how many millions are still out of work right now?
In terms of thinking about how many payrolls we are in terms of where we were, we're still at, I believe, around nearly 7 million short. And Powell has emphasized that over and over again. But I think what's pretty remarkable when we think about how we're looking at the number of unemployed figure is still so many people are out of the workforce entirely. And so tomorrow we're expecting to see a slight uptick in the participation rate, but it's still really depressed compared to where it was pre-pandemic.
Yeah.
And economists have listed a wide variety of reasons for that.
Dave, I love what you had to say about, it's going to be a long weekend. We've got jobs report. I mean, if you look at those major equity averages, there's no reason why. Look, the S&P is up 20% and counting. We've lost count, in fact, of how many records we've gotten on the S&P 500. You haven't. Tim probably hasn't, because you guys probably have this big...
I think
54?
Well, it'll be 55 today, Dave. Is that right?
If
54.
Maybe.
I did lose
We'll
track.
see where things end up.
I did lose track, but we have Dave here who is keeping track.
But it is one of those years where you could say, you know what? I'm kind of good. I don't really need much more. I could just park my money somewhere safe and just bank that 20% gain, Dave.
Yeah, I mean, that's part of it, too. Of course, the problem is, where do you bank it, where you can actually even keep up with inflation, which is a bigger question, and, help us explain why we've seen as much of the strength in stocks as we have. So, you kind of have to take that all into account, no question. I'm just looking, after the close today, you get some halfway decent tech earnings, too. Broadcom and Hewlett-Packard Enterprise on the calendar. We've seen a lot of tech earnings, even though we're kind of in the fallow period in between quarterly reporting. And, there's been some pretty extreme reactions to a lot of them. So, it's definitely going to be something to watch.
A few of those that we're seeing play out today: Chewy, American Eagle down, Hormel down after the maker of Planters, Spam and More, declining the most intraday since
Come on,
November.
everybody, just buy your Spam, will you?
Yeah. Well, and, pressure on cost inputs.
Exactly. Hey, Reed, really quickly, 20 seconds. Could we surprise more likely to the upside or downside on that report tomorrow? Very quickly.
Oh, I have no idea. A couple economists are expecting for government payrolls to add quite a boost to the number tomorrow, which may make it look stronger than it is. But obviously, we'll all be watching to see what it means for the Fed.
All right, looking forward to your analysis. Yeah, Reed Pickard, who follows the economy, and Dave Wilson, who follows stocks here at Bloomberg.
Well, let's do the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
I think this is already my favorite story of the year. Today's number is $15.5 billion. Alibaba said it will invest $15.5 billion over the next 5 years in support of common prosperity, becoming the latest corporate giant to pledge support for the initiative driven by President Xi Jinping. Beijing has been encouraging companies to share wealth as part of the effort to ease inequality in the world's second largest economy. Common prosperity. This is going to be one of the big stories, already is, of 2021.
Yeah, and we were just talking to Dave Wilson, Stocksetter, a little preview for his chart of the day coming up in just about 90 minutes. It does focus on China and the pressure that these ADRs have been on.
All right, lots going on. We have a great show coming up, folks. First up, though, let's get a check on world and national news. Lots going on around the globe. Here's Nancy Lyons.
Thanks, Carol. The death toll keeps rising due to flooding in New York, New Jersey, and Pennsylvania. Now at least 20 deaths, 8 of them in New York City alone. Streets are inundated, transportation paralyzed. Senate Majority Leader New York Senator Chuck Schumer says it's time to fix the nation's infrastructure.
Woe is us if we don't recognize these changes are due to climate change. Woe is us if we don't do something about it quickly.
The storm started its assault on the U.S. in Louisiana, where more than 1 million homes were left without power. Slowly, that's coming back. President Biden plans to survey the damage there tomorrow. House Democrats have chosen Republican Representative Liz Cheney of Wyoming to serve as vice chair of the special committee investigating the January 6th insurrection.
Committee members say that as they ramp up their investigation into former President Trump's family and members of Congress in connection with the January 6th riots, Representative Cheney demonstrated her commitment to find answers about that day and ensure accountability. Chairman Benny Thompson says Cheney's appointment underscores the bipartisan nature of the effort, although most Republicans have refused to participate. In Washington, I'm Amy Morris, Bloomberg Radio.
Far-right extremist groups like the Proud Boys and Oath Keepers are planning to attend a rally later this month at the U.S. Capitol to demand justice for the hundreds of people who've been charged in connection with January's insurrection. Capitol police officials are now mulling over whether to reinstall a perimeter fence around the U.S. Capitol. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries, I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Carol Masser, Tim Stanovic in our Interactive Brokers studio. So here's just a few of the stories that caught our attention when it comes to COVID and the vaccine. Barclays, latest bank in the U.S. to keep unvaccinated staff at home for the time being. Quote, as we continue inviting our colleagues back to our offices in New York, we made a decision to focus initially on those already vaccinated. They put that out in an email statement.
Yeah, we've talked about this for weeks at this point. Banks bringing back more staff to their premises around the world after more than a year of working from home. Many of the biggest U.S. lenders are mandating that people do get shots or wear masks to enter the buildings. UBS, of course, saying on Thursday that staff who don't wish to receive a vaccine, they could apply to work from home.
Absolutely. And then another story by our Jenny Serain and Hannah Levitt, and it's entitled Wall Street Banks Tiptoe Around Texas While Pushing for Vaccines. So as big Wall Street banks crank up pressure on employees to get vaccinated against COVID-19, they have yet to adopt policies that might clash with states such as Texas, where officials are outspoken critics of mandating shots. This is where it's going to be interesting to see private-public sector what happens.
And what happens in one state versus another state. It's no coincidence, Jenny and Hannah write that according to industry insiders, firms aren't eager to wade into the culture wars, and it is worth watching how Wall Street firms navigate this hot button question because the industry is at the forefront of corporate America's attempts to refill skyscrapers.
It's an interesting time for us on a macro level. We'll talk to maybe David Rubenstein about this because I think it's safe to say that we're calling for more public-private partnerships. We've needed it during the pandemic. We need it when it comes to racism and inequalities. And yet you're seeing the two sides certainly come up against one another, against some important issues. I think about Bloomberg Business Week this week. We'll get into the cover story later, but it's all about cities, global cities trying to find their way back from some crises. And many would say that you need a lot of cooperation between both the public and private sector. Infrastructure is another example.
The Biden administration has called on the private sector, too, to help get people vaccinated. The trust that people have for their employers is significantly higher than it is for their government and other entities as well. So important to keep that in mind when thinking about the end of the pandemic.
Yeah, this is heavy stuff.
Yeah.
Maybe that's why you and I are wiped.
It's Thursday, too.
It is, Friday's Eve. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks well off session highs. It is now a down day for the NASDAQ Composite Index and the NASDAQ 100 Index. S&P have been trading at records. It is higher, right now up 4 points, little changed. We have got the Dow Jones Industrial Average also higher by 66 points, up by about 0.2%. We were trading at records, but again, NASDAQ just turning lower, down 11 now, a drop of 0.1%. Stocks almost erasing their gains as a drop in tech shares offsets an advance in economically sensitive companies. Ahead of tomorrow morning's jobs report, we will have complete coverage, of course, as that number breaks, 8:30 a.m. Wall Street time. 10-year yield, 1.29%. We've got gold down 0.2%, 18.09 the ounce. West Texas Intermediate crude up 2.1% with a 70 handle now, 70.05 for a barrel of WTI. Brent 73.07, up now by 2.1%. Among some of the companies reporting after the closing bell today will be Broadcom. Its shares down 0.5%. DocuSign down now by 2%. We'll also be hearing from Hewlett-Packard Enterprise down now by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Thank you so much, Charlie, for getting us up to date. Well, virus headlines, Tim and I just covered a little bit of them. One thing that stuck out for me, Tim, medical experts who advise U.S. regulators on vaccines, they're really chafing at what they perceive as political interference by the Biden administration in the review process of booster shots. I have to say it's a little bit confusing for me.
It's confusing about booster shots and also confusing, okay, which are the vaccines or which is the vaccine that has been fully approved versus the one that has emergency use authorization?
Right.
And what does that mean for employers who can mandate shots?
Exactly. I think it's really confusing. So let's get some clarity. Back with us is Dr. Peter Alperin. He is VP at the now publicly traded Doximity. You might recall it IPO'd back in late June. It is a professional medical network for physicians. He joins us on the phone from Austin, Texas, and he's been a great voice for us to reach out to during the pandemic. Dr. Alperin, how are you?
I'm doing well, thank you. Thanks so much for having me on.
Well, it's good to have you back with Tim and myself. Tell us a little bit about, well, provide us some clarity is basically what I want, because it does feel like we're getting a lot of different information about the vaccine and boosters. How do you see it? What's the advice that you and your colleagues are giving out to patients?
Yeah, so I mean, the core advice remains the same, which is that we advise everybody, for whom the vaccine is approved, which is basically everybody 12 and older, to go ahead and get their vaccines if they haven't done it. And we have seen an increase in the number of vaccines over the past several weeks, the number of people getting vaccinated. With respect to boosters, so at this current moment, the boosters, a third shot, is to clarify what it is we mean by booster, has been approved for people who have sort of certain immunocompromising conditions, and that can either be that they're patients who are living with cancer or that they're on medications which can suppress their immune system. But other than that, it is currently not recommended that people get a third shot. There is talk about on September 20th that people can start to get their booster shots for people who got the shot very early, which is mostly people who work in healthcare.
The clock is ticking, though, to September 20th, and I'm wondering what kind of guidance you would like to see from the FDA or from regulators about who should get it, how long they should wait to get it. If they got Moderna, do they get a booster from Pfizer? Is that okay? If they got J&J and they got one shot, do they get two shots of the mRNA vaccines?
There's a lot of information out there.
What is going on?
Like the rest of us, it's very much a wait and see. I understand the frustration, but I do know that the folks at the CDC and the other federal regulatory agencies are working hard on this. I do suspect that what will happen is that people will be recommended to get a booster, likely of the same shot that they had before. And I have started to read things about suggestions that patients who received the J&J vaccine will receive another one as well. But you raise a very good point. There's a lot of data out there that people need to sift through. One of the things that we've seen, certainly at Doximity, is just the explosion in medical information. And so providers are hungry for clarity like everybody else. But there is, in fairness, a tremendous amount of data. So, again, it remains the same thing. Be safe. Make sure that you're vaccinated the first time. But I suspect that these recommendations will come out quite soon.
Hey, Dr. Alpern, I got to ask about flu shots because here we are. I was at the pediatrician with my son earlier this week. The pediatrician said, hey, we got flu shots in. Do you want to get one for him? And I said, yes. And do you have any for me? And he said, we do. We have extra. And I got my flu shot already. What are you hearing right now about flu season? And what would you say to people who don't even have that on their radar at this point because we've been so focused on COVID, and last year was so mild when it came to flu season?
I just put it on my to-do list, flu shot.
Thank you, Carol.
It's absolutely great question. And you're absolutely right that last year's flu season was mild. Likely because people were really washing their hands and people were distancing. So, important point.
Masks too, maybe?
Can be spread. Pardon me?
Masks as well, maybe?
Yes, masks as well, absolutely. So a lot of the precautions that we were taking and continue to take in a lot of circumstances for COVID are very helpful to prevent the flu. And as I was going to say, is that flu is passed by touch much more than COVID, which has largely been shown to not be transmitted that way. In terms of getting a flu vaccine, it's absolutely a great idea. It's always a good idea to get your flu vaccine every year. The flu is a significant cause of morbidity and mortality, meaning that it puts people in the hospital and can even lead to death in those who are elderly or have certain compromising conditions. So I'm glad that you got your child the flu shot, and I'm glad that you got it yourself.
Hey, listen, just got about a minute left here. You guys have some new stuff that's going out. Tell us about your Residency Navigator tool, because you're a public company and our audience is interested in public companies.
Yeah, well, thank you for that. So one of the things that we do at Doximity is we have a variety of tools and features that help physicians at all stages of their career. And one of those features is the Residency Navigator, which is a tool that helps those younger physicians, the ones graduating medical school and choosing their training program, which is required of all doctors so that they can get licensed. It's a tool that we provide that helps them choose the program that's the best fit for them depending upon what their career goals are. We update that with the latest data, and yes, that just got released a few weeks ago. So we're excited and we're seeing great engagement.
Wait, and there's a couples match? 20 seconds. Is this like Tinder, the medical version? Just quickly.
There's a tool that helps. There's a tool that helps those physicians who have met their partner during residency or some prior time, who are both physicians, to be able to find a location that can support both of their career goals. And so if one is a surgeon and one is an internal medicine physician, they can both use this tool to find the best place to go.
It makes perfect sense. I have friends who, had to fly every weekend to see one another when they were residents because they were residents thousands of miles away.
Is it like swipe left for a surgeon, swipe right for an intern?
I don't know. I'm not a doctor, not on the platform.
Dr. Peter Alpern, always good to hear your voice. Vice President Doximity on the phone from Austin.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I know. I'm looking at you. We're looking at each other because it was a really rough night.
It was, and this comes at a time, I don't want to make this too New York-centric or Northeast-centric, but this is a story that goes across the United States because this is a storm that we were watching closely in New Orleans, and it hit New Orleans very hard.
Mm-hmm.
President expected to go visit New Orleans tomorrow.
Right.
It hit the Northeast very hard, too.
Yeah.
At the same time that fires are raging in California, there's so much to talk about when it comes to the extreme weather we've been seeing.
2 words for you folks, climate change. But we're going to talk about that with our Bloomberg News sustainability editor, Eric Roston, in just a moment. Hey, let's get back to your top business stories. Another look at that trading day. Over to Charlie Pellet.
Hi, thank you very much. 2 words for you. Stocks higher. S&P up by 4 now, a gain of 0.1%. The Dow up 62, up 0.2%. But NASDAQ fizzling, giving up earlier gains on the minus side now, down 4 points, drop there of just about 0.1%. Best level of the day if you caught us early in the trading day, and I hope you did. We were up 70 on NASDAQ, up by 0.5%. But to repeat, we're looking at a 4-point loss right now on the S&P. 10-year yield 1.29%. Gold down $5 the ounce at $18.08, down 0.3. West Texas Intermediate crude up 2.1%, $70.01 a barrel. Stocks have been fluctuating as a decline in technology shares offsets an advantage in economically sensitive companies in the run-up to tomorrow morning's jobs report. Barclays becomes the latest bank in the United States to keep unvaccinated staff at home for the time being. In a statement, Barclays said, quote, "As we continue inviting our colleagues back to offices in New York, we made a decision to focus initially on those already vaccinated. Surging cases of the Delta variant have more employers telling workers they've got to get the jab if they want the job." Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health.
Well, I mean, I think you're increasingly seeing employers require vaccination for their employees, and I think that that's going to have a huge impact in terms of uptake. I can understand why employers are doing that. They want to get back to work and they want to make sure it's done safely. And as this pandemic drags out, it's abundantly clear that vaccinations are the only way to do that.
Dr. Nuzzo with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. A lot of the vaccine stocks trading mixed right now. Pfizer, for example, up 0.8%. Its German partner BioNTech, those ADRs down 1.4%. AstraZeneca's ADRs up 1.2%. Moderna, which has been fluctuating this week, up today by 1.6%. J&J Johnson & Johnson up 0.5%. Recapping, NASDAQ lower, S&P pushing higher, up now by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie got 2 words for you.
I'm all ears.
Thank you very much. Thank you.
Those weren't the 2 words I was thinking of. Thank you.
Thank you so much. All right, Hurricane Ida, not thank you. The 5th largest hurricane in our history. We heard President Biden saying that just about an hour or so ago, making its mark, Tim, from New Orleans and the Gulf Coast all the way up to the Northeast.
It's coming at the same time we're seeing extreme weather play out, not just throughout the United States, but throughout the world, with flooding in Europe and extreme weather in California and a drought that's just gripping the West.
All right, we want to talk about all of this because climate change, we know, is also impacting the frequency and ferocity of storms. Here with more on that is Bloomberg News sustainability editor Eric Roston, joining us now on the phone in New Jersey. Eric, first of all, I hope you and your family are safe.
Hi, yeah, thank you very much. We lucked out. A lot of people in northern New Jersey and in New York and the region had real serious flooding last night, and our thoughts are with everybody who's suffering through this.
Yes, we as well. These storms, the type of storms, where they're hitting, what they're doing. Tell us, you guys cover sustainability, you cover climate change. How does climate change impact what we are living through right now when it comes to storms and weather patterns?
Climate change is exacerbating everything. It's making terrible things worse, basically. We've had, projections for many years that are now really beginning to come true. Heat waves are hotter and longer and more frequent. Tropical cyclones, like hurricanes in this hemisphere, are becoming more intense. There's a very direct relationship between the temperature of the atmosphere and the amount of water vapor it can hold. Every degree the temperature rises, the air can hold about 7% more water vapor, and it comes down when conditions are right, as they have been for Hurricane Ida through the Gulf of Mexico up through the northeast, as we saw last night. So we've expected this. It is as terrible or worse than we expected. And it leaves us with this very strange, I think, situation, which is we're having these terrible weather events, and we know that greenhouse gases are driving a lot of the extra damages we're seeing. So that's where things stand today.
Eric, it's puzzling to me at the same time, because we're seeing these extreme weather events while we're also seeing companies come out, at least here in the United States and certainly in the European Union, with really ambitious climate goals. But these goals are years out. We're talking 2030, 2040, 2050. And I wonder how much worse things are going to get before they start to get better.
We have yet to turn the tide. Carbon dioxide emissions in the atmosphere, that's the most important greenhouse gas, continue to rise, even though they took a big hit, a really historic hit last year. They're down by like 5 or 6%. It's still negligible. So all of these pledges are super, super important. And I think in most cases, there's not reason to doubt the genuineness of the goals or the motivations to achieve them. But you're right. They have yet to become actualized in most cases. There is enormous progress in renewable energy, as we see, just like year after year, the gains are phenomenal, even though they're still not fast enough. But this is an economy in transition that we have now. We see all the pressures. Yeah.
A global economy in transition. Just got 30 seconds, just quickly, Eric. I mean, we talk about inequities. It does feel like those countries, those cities that are wealthier are going to be able to figure out solutions faster and better than others in terms of surviving climate change. Just quickly, is that fair?
That is totally fair. It was the subject of a feature we ran earlier this week that I draw everyone's attention to. Fortunately, and to leave on a hopeful note, many life-saving opportunities in heat waves and other events are not income dependent. We can save lives without rebuilding cities from scratch.
Thank you so much for coming on. We really wanted to check in with you today. Eric Roston, stay safe, sustainability editor at Bloomberg News, joining us on the phone in New Jersey.
Important to check out that feature, too, available at Bloomberg.com. Let's get a check at the latest world and national news. Nancy Lyons is live in D.C. for us. Hey, Nance.
Hey, Tim. The Northeast is trying to rebound after catastrophic flooding from the remnants of Hurricane Ida. New York Governor Kathy Hochul is facing one of her biggest challenges since taking office.
Trains were shut down. People were stranded. The fear that they must have experienced when this occurred, I cannot imagine. And I don't want this to happen again.
Hochul wants an after-action report on the failures in the hurricane's response. Police say 8 people died in Brooklyn and Queens, and there are reports at least 12 more were killed in New Jersey and Pennsylvania. A sharply divided U.S. Supreme Court has refused to block a Texas law outlawing most abortions after 6 weeks of pregnancy. The ruling allows the law that went into effect yesterday to remain in place. Vanessa Rodriguez with Planned Parenthood of Greater Texas says they're still helping women get an abortion in Colorado, Oklahoma, Kansas, and New Mexico.
We had to tell people that we can't see you, and it's heartbreaking to tell someone that they don't have a choice.
Rodriguez says the new law is creating confusion. It allows private citizens to bring civil suits against anyone who assists a pregnant person seeking an abortion in violation of the ban. Delta Airlines says it expects at least 2 million customers to travel over the Labor Day weekend, and that could be more than twice as many customers than last year. But those projected numbers are still only 80% of Delta's business on Labor Day weekend in 2019. And if at first you don't succeed, NASA's Mars rover Perseverance has made a second attempt to retrieve a rock sample. Images show the robot made a neat hole in a thick slab of Martian rock. Now they need to see if the drill secured a core. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, we sound like a broken record, but if you put the word tax or taxes and Americans paying taxes, it tends to trend highly when it comes to the most read on the Bloomberg terminal.
It also helps when you have someone like Ben Steverman write about it, because he helps explain this in a way that is appealing to even those who don't necessarily have to shield billions of dollars from the tax man.
This is our most read story on the Bloomberg in the past 8 hours. So it talks about rich Americans already have a plan to escape Joe Biden's tax hikes. It's a strategy called private placement life insurance. It's a loophole that one policy expert says is, quote, entirely legal, easy to exploit, and politically very hard to close. Check, check, check.
Okay, so the threat of higher taxes, what President Biden calls making billionaires and millionaires pay their, quote, fair share, it's not the only factor that's actually sparking interest in so-called PPLI. It's a little noticed change in the U.S. insurance law at the end of 2020. That's what makes the tool more powerful. At the same time, that competition among insurance carriers and advisory firms is giving rich investors more flexibility, lower costs, and a wider choice of products when it comes to those PPLI platforms.
And apparently, Tim, as long as the assets are held in a PPLI policy, they escape taxes. And then when a policyholder dies, their heirs inherit the PPLI's contents tax-free. Those perks really striking at the heart of President Biden's plans to get the very wealthy to pay more taxes on their investments, especially on capital gains that currently aren't levied if assets are held until death. This is how many discussions have we had about the ability of the wealthier to use different vehicles to really shield assets from taxes?
Well, I got to tell you, this is not something that is easy to do, and it certainly does have its drawbacks.
You don't
not
have
that
one?
I've tried
You don't
it.
have
Not
one?
that I've tried.
Are you sure?
I don't. But Ben writes that strict and very complicated rules determine whether a PPLI policy qualifies as life insurance. That's an important distinction because that's what gives these accounts their tax benefits. The policies can fail if not funded properly over time, and once assets are inside a PPLI, Carol, they can't be taken out without a big tax bill that they can be borrowed against. That's key, or rolled into another insurance product.
And there's some drawbacks. Some strict and very complicated rules determine whether a PPLI policy qualifies as life insurance. So there's a lot to understand.
Hey, the lawyers are going to make a lot of money.
They always do. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. NASDAQ back in the green, barely up now by 1 point. We've got the S&P higher by 5, up 0.1%. The Dow is up 65, up by 0.2%. 10-year yield 1.29%. A decline in technology shares has offset an advance in economically sensitive companies in the run-up to tomorrow's jobs report. Traders are also assessing comments from Atlanta Fed President Raphael Bostic, who said, quote, "We're going to let the economy continue to run until we see signs of inflation." Again, the 10-year yield 1.29%. Gold is down 0.3%, 18.08 the ounce. West Texas Intermediate crude oil up 1.9%, 69.92 a barrel. Bitcoin up 2.2%. $49,352 on Bitcoin. Recapping, stocks higher, S&P up 5, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks. Well, this week it is a special double issue of Bloomberg Business Week magazine. It's the city's issue, and the cover story of the issue is about Mark Lorry, who, Tim, amassed a fortune-building e-commerce site, several of them, and he's on a new mission, investing that money into building a privately run city. He shared that vision with our own Joshua Brustein.
He did, and Joshua Brustein joins us now. He's technology editor at Bloomberg Business Week. He's joining us on the phone from New York City. I think a lot of listeners and readers of Bloomberg Business Week magazine might remember Lorry from the cover that he was on a few years ago when he launched Jet.com. That was the way that the world found out about Jet.com before Walmart a couple of years later bought it for more than $3 billion. But Joshua, before we get into this, just give us some background about who Mark Lorry is and really what he's trying to build after building these e-commerce sites.
Sure. Yeah. Thanks for having me. As you said, Mark Lorry has had a successful career building e-commerce websites. First, he built the company that ran Diapers.com, which he sold to Amazon. Worked for Amazon for a bit, left, and built Jet.com, which was basically an Amazon competitor, which was bought by Walmart. He then ran Walmart's e-commerce division for about the last 5 years. But almost immediately upon getting to Walmart, he started talking to people about this plan to build a city from scratch, basically. His current plan is for it to have eventually about 5 million people. That would be 40 years from now, and obviously a lot would have to go right to get there. And he's just starting to lay some of the groundwork for what's a pretty audacious project.
Is it going to happen?
Historically, if you look at what other people who have come up with similar plans like this, I think the answer would be no. There have been a really steady stream of these utopian city building projects over the years. I talked to a professor at McGill University who studies them and says that there's about 150 such projects underway right now. But she said she couldn't really point to a single one that had fully succeeded in its goals. Some of them do have some people, but they never quite get to the heights that they're aiming for.
Joshua, a few months ago, you got some time to really sit down with Mark Lorry and really get his vision, which you lay out so clearly in the cover story of this edition of Bloomberg Business Week. What is it that motivates Mark Lorry to do this? What is he concerned about? What is his thinking around this, the philosophy around this?
Yeah, interestingly, I sort of figured that, you know, a guy coming from the tech industry wants to start his own city, that mostly what he'd want to talk about are autonomous vehicles, drone delivery, things like that. I mean, sort of
light touch regulatory environment.
I think I want an ice cream cone in my hand and it just appears. Things like that.
Exactly. And he did talk about that a little bit, but like the thing that he's really interested in is this model of land ownership, which was first floated by an economist named Henry George in the 1900s, which is basically the idea that you could hold all of the land in a city in a trust, and instead of allowing people to own their own land, everyone would be leasing the land from this central trust, and the income from those leases could be poured back into social services. And Now, Lori thinks that this is a way to deal with inequality, which he professes to be his main incentive in trying to pursue this project. It was a little bit jarring to hear this from a guy as he sat in his $44 million penthouse apartment and explained it to me. But that is really what he seemed laser focused on.
It sounds like a really nice apartment, by the way.
It was a great apartment.
Okay.
What I will say is, and we're getting ready to talk with David Rubenstein, who has a new book out called The American Experiment. And it's, conversations he's had as America has continued to evolve and innovate and change on some really important issues. And I do think we are at this critical juncture when we look at some of our cities that are struggling and have struggled so much in the last year and a half. And you do wonder what happens going forward. Will the infrastructure ultimately come from the federal government and maybe change some of those cities that have been struggling? Do we have an opportunity, because we could work from home, we don't have to work in major cities, to reinvent the cities and towns that we have out there? So, as crazy as it might be, Joshua, you do wonder, does Mark Lowry maybe have something that maybe there are ways we can do things better?
Yeah, I think that there's a couple of themes that come up in a number of these sort of technology-driven utopian city-building ideas, which I think are rather valid critiques of the way that cities work now. I think Lori has correctly identified the fact that inequality is an enormous problem and is causing really a lot of strain on the capitalist system in the United States. Right. Also, if you have something like autonomous vehicles, you want to cut down on car use generally, these are big transformations of a city, and it's very hard to get things done in cities. They tend to really grind down due to inertia, politics. There's a lot of reasons why things can't happen. And so, yeah, I think that those are good diagnoses of the problem. Whether you'd be able to do something like that by starting anew, I'm not sure that's any easier. But, it's certainly tempting to give it a try.
Where does this fall on his list of priorities? And also when he thinks about what he wants to be known for? I mean, this is a guy who's bought a stake in a pro basketball team. As you write, he's learning the basics of his new Steinway grand piano. He's got this team that's working on this new reality show. He's invested in eVTOLs. Where does this fall on his list of priorities right now?
I think the eVTOLs and the city kind of work. eVTOLs are electronic vertical takeoff and landing vehicles, basically flying cars. I think those might fit into the city. I think it's right to wonder, with all these other things going on, do you have this sort of crazy project out there? If you're devoting 20% of your time to it, something that's basically impossible anyway, can you do it in 20% of your time?
Yeah. Right.
That seems like a valid critique. His response to that critique, which obviously I raised with him, is that, well, starting now, there's not much to do with the city project, but over time it will become everything he does, and he'll sort of, move towards devoting all of his time to it. I think it would have to get to a state much different than it is now to justify that, but that's his plan.
Well, there's so much detail in your story, and it's a great read. It is the cover story of the double issue of Bloomberg Businessweek magazine on newsstands, on the Bloomberg, and at businessweek.com. Joshua Brustein, thank you so much. Technology editor at Bloomberg Businessweek. As we said, his cover story on Mark Lowry trying to create a utopia.
For those of you now listening in New York, Washington, D.C., and San Francisco, or watching on YouTube, Bloomberg at Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next. Carol, I've interviewed Mark Lowry a few times before and during Jet. It's just like a normal guy.
Normal's good.
Yeah. It's so interesting to hear about this grand vision.
Yeah, well, speaking of grand visions, David Rubenstein and his latest book, we'll get to that in just a moment.
hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are off session lows. Could see some records at the close. We've got 1 hour to go before that closing bell clangs on Wall Street. The Dow, the S&P, NASDAQ 100 index. Actually, NASDAQ 100 is lower, but the Dow, the S&P, NASDAQ, they're all higher right now. Stocks have been fluctuating as a decline in technology offsets an advance in economically sensitive companies in the run-up to tomorrow morning's jobs report. Complete coverage, 8:30 a.m. Wall Street time, right here on Bloomberg Radio. Traders are also assessing comments from Atlanta Fed President Raphael Bostic, who said, quote, "We're going to let the economy continue to run until we see signs of inflation." 10-year up 1/32, 10-year yield 1.29%. The S&P up 9 now, up 0.2%. Off session lows, the Dow up 97, up 0.3. NASDAQ up 15, a gain of 0.1%. To be clear, the NASDAQ 100 index down by 0.1%. Spot gold down 0.2%, 18.09 the ounce, and West Texas Intermediate crude 69.85, up by 1.8%. Tomorrow's employment report could be pivotal for the Federal Reserve coming out of the pandemic. And with that story, here's Bloomberg's Vinny Del Giudice.
Economists say U.S. job growth probably topped 700,000 in August, following gains nearing 1 million in June and July. Bloomberg Economics says Friday's data pose a critical test of whether the central bank will start withdrawing emergency support for the economy, tapering historic bond purchases. Fed officials have signaled they're poised to act if employment data look good. Vinny Del Giudice, Bloomberg Radio.
Speaking of employment, Walmart says it's going to be increasing wages by at least $1 an hour for more than 565,000 of its U.S. store employees. Walmart up by 0.5%. GM says it will idle key truck plants for a second time in a month on semiconductor shortages. GM shares up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so grab your drink of choice, settle into a comfy chair. If you're driving, pull over because we've got a great guest. Our next guest talks with all kinds of leaders from all walks of our lives, the household names, the execs, the innovators, the warriors, the upstarts, the artists. And from those conversations, he's written a trilogy of books, How to Lead on Leadership, The Second, The American Story. It was all about the American history. And the book's title, The American Experiment, Dialogues on a Dream, is his third book in this series. So it's great to have joining us David Rubenstein. He is host of Bloomberg Wealth on Bloomberg TV and Bloomberg Radio. And of course, you know him as co-founder and co-chair of the private equity firm, the Carlyle Group. He joins us in our Interactive Broker studio. Thank you for joining us.
My pleasure to be here. Thank you for having me.
It's really wonderful. And I feel like you are someone who talks with so many different people, different points of view. We were wondering about the last couple of years with everything going on, how that kind of has shaped who you want to talk to and how you were thinking about this book, The American Experiment.
Well, generally, I like to talk to people who are willing to say something. As you know, from being an interviewer, if you watch the Sunday talk shows, sometimes you say, why do these people go on these shows? Because they don't really want to say anything. What you want is somebody who's willing to say something and say something they haven't said before. That's the best interview, right? And so I'm always looking for somebody who is willing to be engaging and doesn't want to just spar with the interviewer and not say anything. So, you know, it's a challenge, but that's what I'm trying to do. And you always want somebody that people will listen to and want to hear. So if I got an engaging guest, but nobody's ever heard of that person, it may not be as effective. If you can get Jeff Bezos, you know that's people want to hear from him. So, right. So you want somebody who has a name and who's willing to engage. And some people are great, and some people are not as great. And you just figure it out during the interview.
But we think about what's happened with the pandemic, the Capitol riots, the inequities, George Floyd. We could go on and on. It feels like a decade or 2 decades of history have happened in the last year and a half. How has that, David, shaped kind of your thinking and putting this book together? And again, the voices you wanted to get to.
Well, each one has a different thing. Take the January 6th event. I do talk about it extensively in the book, and I basically say it was a severe stress test for America, and America won And I dedicate the book to the public servants who protect our democracy, because remember, we had 65 lawsuits that were filed to overturn the election, and none of them actually prevailed. None of them got very far. All the judges basically complied with what is the rule of law, and they basically didn't act political. So I think we learned a lot about the importance of the rule of law in this country. We also learned a lot in terms of the importance of health care in this country, how it's so unfair that people are of minority status or are poor really were suffering disproportionately because of COVID, because they don't have good health care to begin with, and they didn't have access to the best health care. And it's a sad situation. But it also made me think about this, my mortality. I'm 72 years old, and when you're 72, you had a chance of, you got this disease, you could maybe not survive. And we now know that 65% of the people who went on ventilators didn't actually come back out of the ventilators. We were putting people on ventilators thinking it was helping. It wasn't. So we learned a lot about how to treat people, but suppose I had gotten this and I went on a ventilator, I probably wouldn't be here now. So I learned a lot about my mortality and thinking about it, and the result is I'm rushing to get more things done because I now realize, hey, life is very short and something bad can happen very quickly. And so that's been something that I've been thinking a lot about.
It's like the Hamilton, right? I'm running out of time.
Right.
That whole concept.
As you point out in the book, the American experiment has been relatively short at this point. And I'm wondering if you could contextualize the way that you think about what happened over the last year and a half as to what extent it really stress tested us. Because you do make note of the judiciary essentially saving the United States, not the lawmakers. Because you do call out in the book the lawmakers, the senators and the members of Congress who voted to overturn the election. They are still in power right now.
Yes, and I know many of them, and privately they will say to you, well, I had to do that, or I knew it wasn't going to really prevail. Sure, many of these people are, I live in Washington. I host a series in front of members of Congress once a month. With COVID ending soon, hopefully I'll be resuming that. And I know a lot of members and so forth. And, privately what they say is, well, I had to do this, and they didn't really believe in it, but, and so forth. Some will say that. I'm not going to go say who said that. But clearly, it's a very political situation. It's just the saddest part of the whole situation we now face is that we've politicized the government so much so that the country's really unable to move forward very much. We have people who don't want to wear masks, who think that it's a good thing to force people not to wear masks, in effect. It's a sad situation in many ways when you think about it, that school children whose teachers want them to have masks are being told they aren't supposed to have that mask. So, bad situation, and people are dying because of this.
When did debate become like a bad thing? I thought that was what kind of the roots of democracy were all about, this whole idea of having different perspectives and hopefully talking it through and getting to a better place.
When I worked in Congress in the 1970s and in the White House, there were obviously political disputes all the time, and obviously this was after Watergate, but people thought eventually you got to get something done, and so you had bipartisan legislation. Now, if to be considered a great legislator used to be you were good at bipartisan legislation, get people from both sides to work together. Now, to be a great legislator, you're probably somebody that is good in only getting your Democrats or your Republicans to support you. And members of Congress now spend so much time raising money because they want to raise money for their campaigns or to thwart anybody from challenging them, and they have to spend 40% of their time, in the case of members of the House, to raising money. And the money and the internet and social media has just divided the country in so many ways that I find it interesting when I host these dinners. Many people say this is the most interesting thing that members feel they're doing in Washington. They can have a dinner when nobody sees they're meeting with somebody from the opposite party because there's no press there, and they can talk to people from the opposite house, which they rarely do because they rarely have conference committees anymore. It's, look, I also recognize this. Every generation, 10,000 years back and so forth, has always said, well, in my time it was better, and now it's not as good. Now, George Washington's father allegedly told him, well, your generation is not going to achieve anything because you guys are not hardworking or whatever. Well, the truth is, every generation tells the younger people you're not going to be tough enough, you're not going to be surviving enough, and ultimately civilization goes forward. So sure, there are challenges now. I'm not happy with many things that have happened. One thing that did happen, though, during all this period of time is the George Floyd murder. In that case, the thing that struck me was this. I lived through the Civil Rights Revolution. We've lived through the Voting Rights Act, the Civil Rights Act, and so many things that have been done, affirmative action, other things. But this one murder crystallized for people in this country the fact that we are still discriminating in so many ways. Just think about it. All the people that have been lynched over the years didn't seem to have the same resonance as this one murder. Maybe because it was on TV, maybe everybody saw it, maybe because people saw it was so ridiculous the way it was handled. But we've made some progress, obviously, on racial relations. And I'd say in the book that while we've made a lot of progress on racial relations and gender equality and other things, we still have a long way to go. The rhetoric that is in the Declaration of Independence and the rhetoric in the Constitution is wonderful. Well, we've been spending 230 years trying to live up to that rhetoric, and to some extent we've made progress, and to some extent we haven't. And what I say in the book is that we have these genes. These genes are part of us. The belief in the rule of law, the belief in equality, the belief in the power of voting. And we've been trying to make sure that people kind of honor these things that are part of our genes, and sometimes we do and sometimes we don't. The rule of law is a gene that's so strong that it prevailed in the January 6th situation and the post-election fight, and I think that was good. In many other countries, had you had a leader do what was done here, I think you could have had a military takeover.
Yeah, it could have been much closer. I wonder, David, about this sense of optimism that you have potentially after writing a book like this. I do think there is this collective despair over the last 18, 19 months as this pandemic has played out and we try to get to the other side of it. And here we are sandwiched between extreme weather events, you know, that are affecting the entire country, whether it's drought or hurricane or fires, trying to get our kids back to school. After writing this book and speaking to these people and looking so closely at the history of the United States, are you optimistic?
I think most people who are asked that question will say yes, because nobody wants to say, no, I'm pessimistic. It sounds bad to say I'm pessimistic, and I'd be lying if I said I was pessimistic. It might make news to say I'm pessimistic. I am optimistic about many things. The young people are so creative. We are solving some problems like global climate change. We're working on some things. Racial relations are getting better. They're not perfect. But if you weren't optimistic, it'd be hard to get through life. If every day you were so depressed you couldn't get through life, you know, what would you do? So I'm optimistic, and you know, I've been fortunate in my life to be able to be optimistic because of good things that have happened to me. But generally, I'm reasonably optimistic. I'm just worried about some things that we could solve that we don't seem to be solving as quickly as I wish we would.
Let's talk about some of the conversations. Ken Burns, Madeleine Albright, Jill Lepore, who I don't know is necessarily a household name, Walter Isaacson, David McCullough, some of the things, Rita Moreno, some of the conversations that stood out. And obviously, they talked about very different topics.
The different topics.
But a common thread, I guess.
Well, Ken Burns talked about Vietnam, and it turns out in Vietnam, the political leaders knew all along. They knew all along that we had no chance of winning that war militarily. It was really a political exercise, which was disappointing because we lost 58,000 men and the Vietnamese lost millions of people. David McCullough did a wonderful job of explaining how nobody took the Wright brothers seriously in this country. They had to go to France to kind of prove that they could fly.
Another reason why we love France.
Right. You know, so Rita Moreno is an incredible story, and a woman from Puerto Rico who was not taken that seriously as an actress because she was from Puerto Rico. She was given kind of Latina jobs, but she turned out to be an Academy Award winner, and she had an interesting life. She lived with a very famous person for quite some time, Marlon Brando, and I think 8 years or so, and then tried to commit suicide because he was unfaithful. And then she recovered from that and obviously went on to now win an Emmy, a Grammy, every other award, Tony, that you can win. So she's quite an impressive person now, still performing at age 88 or 89.
She was at our Boston Pops event, and she's a Spitfire. Got to meet her, and she's unbelievable in terms of her energy. You also talked with Walter Isaacson, and I think innovation is something we spend a lot of time here talking about around the table. And you know that governments, the complicated relationship really between governments and innovation. We're seeing it once again. What did you glean from that conversation?
Walter points out in his book, really focused on the innovators, a book right before the Code Breakers. Code Breakers is a new book about a woman that won the Nobel Prize for, in effect, discovering CRISPR. And that's a great book as well. But the innovators is about all the people that have changed our lives, who invented the microprocessor, the transistor, the smartphone, the internet, all the things. How could we live today without the internet? How could we live today without smartphones, all these things? But now these all came about because of smart people doing things that people said couldn't be done, and typically as part of teams. There are very few geniuses. They're discovering things by themselves. He points out usually it's a person working with somebody else, and usually they're building on something that somebody else actually did before them. But the most important thing is our country has been a country where we've been strong because of innovation. We are the country that innovates. We're reinventing ourselves all the time. Why aren't people in Europe inventing great companies like with companies we have? You don't see as much in Europe or in other parts of the world as we have been seeing here. Right now, the technology that's dominating the world, certainly outside of China, is American technology. Microsoft, Amazon, Apple, Facebook, all these companies are American companies. Why aren't we dominated by European technology companies or Middle East technology companies? Because Americans have this innovative style, and we really incent people to do things innovative here.
Wait, I got to follow. So what do you think about what's going on in China right now in terms of really clamping down, it feels like, on the innovators?
Well, in China, I think what's going on is the Chinese government is trying to make it clear to everybody that we, the government, are the most important thing and not the innovators. And so I think there's a concern that sometimes you get entrepreneurs who are worth a lot of money. They're cult figures themselves, Jack Ma and the equivalent, and they kind of rival the government leaders, and the government doesn't think that's appropriate. So the government is doing some things to constrain this. We'll see whether the impact is to have people not be quite as innovative, or whether people will try to take more money offshore, or entrepreneurs will come to this country and not go back to China. You don't know yet.
Will it prevent, though, China? And we're talking, of course, with David Rubenstein. His new book is The American Experiment, also host of Bloomberg Wealth here at Bloomberg Radio and TV, and co-chair, co-founder of the Carlyle Group. But it's interesting, David, do you think it'll prevent China from being kind of a global presence when it comes to innovative technologies, which is what President Xi has said he wants to be?
It may have some impact, but right now, for example, what is up in the air is who is going to dominate technology around the world over the next 10, 20, 30 years? Is it going to be the American technology companies, or is it going to be the Chinese? Right now, the Chinese technology companies have largely been successful in China. Google and Facebook really don't quite operate in China. They have their own equivalent there. But has China been able to take Alipay, Ant Financial, or Alibaba outside of China that much? Not so much. Or the same with Baidu. Now, the only one that's really become a major force outside of China is ByteDance, which has TikTok, but it doesn't operate at all in China. It really operates outside. But over the next 10, 20 years, 20 or 30 years or so, there'll be an effort by the Chinese to say, let's take our technology companies and use them in Europe, Latin America, the Middle East. And who will dominate? Will we have two internets, or will we just have one internet? And it's unclear. To the extent that we weaken our technology companies in this country, it may be that we won't be dominant around the world as much as we have been. But when you think about it, you go anywhere in the world now, you can use Google, you can use Facebook. You can't go use Baidu or Alipay anywhere in the world. That may change.
Unless you're in a part of China where one of those services is blocked. David, given what's happened in China over the last few months, would you be hesitant to deploy capital there, to invest there, at least for the near future?
I am an investor in China. I've been a long-term investor there. My firm is an investor there. I personally invested there.
But what about thinking forward over the next few years, given what's happened over the last few months?
There clearly are going to be some constraints on growth and valuation. So, for example, many of the companies that have had some constraints, the Ant Financial transaction is one in where the valuations come down because they're not going to go public quite as quickly as they were going to. I still think, though, you've got a population of 1.3 billion people and a gigantic market, the biggest market in the world. And the country is becoming increasingly wealthy, and therefore people are increasingly spending money. We operate a number of companies there. We operate with our Chinese partners at McDonald's in China. And clearly that's a growing business, doing well. So I wouldn't be hesitant to invest in China. I would just be hesitant to do things that the government isn't going to really like. You got to be very careful and make sure you know what the government will tolerate and not.
The book at the very beginning, you include the preamble to the Constitution. If you could sit down with a forefather today, who would it be? And what would you want to know?
Well, I will answer that in 1 second. I would just say that, interestingly, we had white Christian property owners, men, who were our founding fathers, right? If we had a new Constitution, a new Declaration of Independence, who would those people be? It wouldn't be all white men, right, or property. We'd have presumably women, we'd have minorities. Would we get a different Constitution? Would we get a different Declaration of Independence? Probably would. If I could have dinner with any one of those founding fathers, I guess it would be Thomas Jefferson, just because his rhetoric, his writing style is so wonderful. And I'd ask him, how come you never made a speech? As president, he only made one public speech. If you ask Walter Isaacson, he would say he'd like to have, of all the people he's written about, he'd like to have dinner, I think he would say, with Benjamin Franklin, because he's so creative and so brilliant in so many ways, uneducated by traditional standards. But any of it, I think if I could have dinner with anybody that's ever lived, who's an American, not currently alive, it would be without doubt Abraham Lincoln. In my view, the greatest American of them all, kept the Union together, freed the slaves, though not as quickly as some people would want it. But he was an incredible person, writer, great speaker, and I just like to ask him this a lot of questions. And it's an interesting phenomenon. You and I are all in the interview business, and this is a business where it's just relatively common now. It's not unique to be an interviewer, right? Lots of people,
Right.
you know, everybody has a podcast. I think there should be a bumper sticker that says "Punk if you don't have a podcast." Everybody's got their own podcast. Everybody's got their own TV show. Everybody's got their own radio show. But this is relatively new. For most of organized history, there were no interviews. So we have no interviews of Shakespeare. We have no interviews of Cleopatra. We have no interviews of Abraham Lincoln, George Washington. I wish we could go back and interview them. I've thought about doing a book interviewing what these people would have said if I'd interviewed them.
That's a great idea.
So I got to say to William Shakespeare, no, Will, why do you think it is that people think you didn't write these plays? Or did you really write these plays? Tell us the truth. Or Cleopatra, who was a better lover, Mark Antony or Julius Caesar?
When you land these interviews, let us
Or
know.
both.
We'll play some
Right,
clips.
yeah, or Henry VIII. Why didn't you just get a prenup instead of chopping off the head of your wives? There are a lot of great questions we want to know the answers to.
Well,
That's book number 4.
Yeah. You did get some fantastic names for this book, you know, including Ken Burns, as we talked about, Madeleine Albright, John Meacham, Billie Jean King. Who did you reach out to that you couldn't get?
Who said, I'm sorry, who's this David Rubenstein? I don't have time. Kidding.
No, look, some people do not like to do interviews, and some people are more complicated to get a hold of, and so forth. So on this particular book, I have not interviewed, let's put it this way, I have not yet interviewed Elon Musk. I'd like to do that. Walter Isaacson is writing a book about him, and that presumably will be the source of a lot of
We
information.
saw that on Twitter a few weeks ago.
Yeah.
Elon Musk
Yes.
talking about that.
I talked to Walter about it, and he's very happy. He's spending time with him now, and Elon is. I won't give away all the stories,
But it is
they're-
happening.
It's going to happen absolutely. And I would say that I'd like to interview. I haven't interviewed Mark Zuckerberg. I'm on a board with him in China. I've been there, talked to him a couple of times, but I haven't really interviewed him. I think that'd be interesting. I had a chance to invest in that company when my son-in-law-to-be was at Harvard, and he said, "You invest in this company." I said, "It's a dating service, and dating service never get anywhere." That was $13 billion ago. But,
Ouch. Is there a woman that you haven't talked to that you would like to talk to?
well, Queen Elizabeth doesn't do interviews, so I think that's probably not going to happen. But I would say I have not interviewed Mrs. Obama. I've met her many times. I haven't interviewed her. I think she'd be very good as an interviewee. I have interviewed Melinda Gates. I've interviewed many business leaders who are prominent women. And
Mackenzie Scott, have you thought about?
I have met her, but I haven't interviewed her. I haven't actually asked her yet. I think she's relatively shy
Okay.
and doesn't seek publicity as the way she's doing it. But if she's watching or listening right now, I'm ready to come out to Seattle tomorrow and do that interview because she's doing some really good things in philanthropy.
And really turning the world upside down by doing it fast, doing it very differently than how a lot of other people have done it for a long time.
Yes, and I mean, she's got. I think she was given $34 billion, and now it's probably worth $75 billion. So she's got a lot of money.
Yeah. We have 3 minutes left. Please don't go anywhere. No, just stay forever. The investment environment, I don't know, whether it's SPACs, whether it's crypto, what's interesting to you right now?
Well, clearly, crypto is something that gets a lot of attention. It's amazing how many people are interested in crypto-related
Are you
things.
invested in crypto in any way?
I have not invested in cryptocurrencies myself. I have invested in some companies that kind of service the industry. And my standard view on crypto is when you go to Las Vegas, most people are smart enough to know you're not going to win there. And if you spend more time there, you're certainly not going to win, but you enjoy it. You have the pleasure of gambling. So you pick 1 or 2% of your net worth and do that. Well, the same is true in crypto. Crypto, you want to speculate, you don't really know that much about it, try it 1 or 2 or 3%. It's not harmful, and you'll probably have an enjoyable time, perhaps. I interviewed for my show on Bloomberg John Paulson recently, and he is dead set against it. He just said, this is terrible, and it's going to zero. But on the other hand, I've interviewed some other people that'll come out soon who are going to be saying, hey, I think it's a way to make a lot of money. There's one person I'll be interviewing soon who's made billions of dollars in crypto.
What about when it comes to SPACs and where we are in this cycle with SPACs?
SPACs.
Are they here to stay? And look, SPACs aren't anything new.
No.
They're just having a moment right now.
SPACs are not going away, but you have to be wary of what you're doing. You have to know what you're really doing. So SPACs are a way to accelerate an IPO process. And right now, it's harder to raise money for SPACs, and not just the SPAC money. There are 2 types of money you have to really raise. You raise the initial money for the SPAC, but then you raise money that's called a pre-IPO PIPE money, which is the money to help you get public or help the public evaluation stay to what you think it should be. And it's harder to raise that money right now. A lot of somebody is raising, I think it's Apollo, is raising a fund to invest in the SPACs that aren't doing so well and to buy them on the cheap, which is an idea that I think probably has some merit.
We've already gone to distressed SPACs. 30 seconds left here. What do you think will be the next grand American experiment, just quickly?
Well, the next experiment that I think we'll see, I think probably we're going to see at some point, I hope, greater cooperation between the Republicans and Democratic parties when we have some crisis that really unites them in ways that we haven't really truly been united since 9/11. Now, we're getting ready to celebrate, or mark, I shouldn't say celebrate, the 20th anniversary of 9/11. We're going to do it at the Kennedy Center. I'm the chairman of the Kennedy Center. We're going to have an event doing that and thanking our military people, but also thanking the healthcare workers who got us through this most recent period of time.
We thank you.
Thank you very much for having me.
Thank you so much. David Rubenstein, of course, co-founder, co-chair of the Carlyle Group. His latest book, The American Experiment, Dialogues on a Dream. Do check it out. It's a great, still summer. It is still summer, everyone. Still summer read. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I said it was going to be a blockbuster show. David Rubenstein, unbelievable.
Unbelievable. And Carol, I got good news. We are only halfway through our show.
Still coming
Half
up.
of the blockbuster is left. We got Rob Katz, the CEO of Vail Resorts. This is his first interview that he has given since last month announcing the CEO transition. He's been at the helm of the company since 2006.
And then we've got Dave Wilson. He's also coming up, chart of the day.
Oh, yeah, that is the biggest deal. And the song of the day. We've been studying.
Totally. All right, we'll get to him in just a moment. First up, though, let's get back to your top business stories. A look at that trading day. We're 29 minutes away from the close,
Indeed,
Charlie.
and we're higher across the board here. Could see records. Find out for sure when we hear that closing bell with the S&P up right now by 4 to 45.28, up 0.1%, extending the year-to-date gain to 20.5%. The Dow up 49, now up 0.1%. We'll give you the why in a moment. NASDAQ up 3. Little change now, has been fluctuating. 10-year yield 1.28%. Stocks higher ahead of that key jobs report tomorrow morning that will shape bets on the path of interest rates along with the Fed's massive bond buying program. 8:30 a.m. Wall Street time is when that number breaks, and as usual, we will have complete reaction and analysis right here on Bloomberg Radio. Again, the 10-year yield 1.28%. Spot gold down 0.2%, 18.09 the ounce. West Texas Intermediate crude oil up 1.6%, 69.72 a barrel. Wells Fargo is pushing back its return to office plans by 2 more weeks to mid-October. Financial firms, which have been at the forefront of repopulating offices, are now grappling with how to adjust plans as the Delta variant continues to spread across the country. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health, and on Bloomberg Television and Radio this morning, she told us she is concerned about hospitals dealing with natural disasters amid the complications of handling unvaccinated COVID patients.
You know, even if we see a small surge of COVID cases, that is going to put strain on the whole system. So that means if you show up, not with necessarily COVID, but a heart attack or anything else, the level of care that you're going to get is probably not going to be the same. So we all have a role to play, and this affects all of us. We all want to be able to survive survivable illnesses or conditions, and that's so much harder to do when we have a pandemic raging and natural hazards in the backdrop.
And Dr. Nuzzo with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track, Pfizer shares up now by 1.4%. Its German partner BioNTech ADR is down 1%. AstraZeneca's ADR is up 1.4%. Moderna out of Cambridge, Massachusetts, up 1.9%. J&J Johnson & Johnson up by 0.4%. Recapping stocks higher, S&P up 4 right now, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Bloomberg.
Not Boz Skaggs.
Yes.
Wow.
God.
That was so organic.
I did not even cheat.
I know you didn't. That was so
Absolutely.
organic.
I figured if I gave you his hits, you might have a shot.
Nice job, Dave
But that was
Wilson.
actually from his first U.S. album, 1969. You know who was playing guitar in that? Duane Allman.
I was trying to think of the guitar greats too, because you could tell there were some pretty cool licks. Aren't I cool when I say
absolutely.
Look at that. Well, your
So
husband
you
plays
had the right
guitar, so
idea. You're in the
right?
ballpark. So
Yeah, so you know the lingo.
I've been a
He
what do they
plays
call them?
the axe,
Roadies?
the
Roadies
axe.
groupie? That's what I've been. I've been my husband's groupie.
okay, and the song's
Dave.
called "Loan Me a Dime."
Nice.
Oh.
All right.
Okay.
How much is a dime worth?
All right, how does this connect to ADRs?
How much is a dime
10
worth?
cents, 10 cents.
10
yeah.
cents.
Oh, 10 cents.
So the chart's
Oh.
about 10-cent holding. There you
Wow.
go.
Good connection.
Sometimes it doesn't take much, especially before a long holiday weekend.
That's
Let's
hot,
put it
Nice
that
job,
way.
Dave. I
In
like that.
any case, the reason we're talking about 10-cent holding is that Aswat Damodaran over at NYU wrote about them. And, he's the author of 4 books on valuation, so he kind of knows a little about the subject. We know that 10-cent and a whole lot of other companies based in China, traded here in the U.S., have taken a beating in the last few months as the country's government has sort of ratcheted up regulation, trying to bring the tech business to heel, you might say. So what do you do about that as an investor? Do you just watch it go by, or do you figure maybe it's a time to buy? Well, it was the latter for Damodaran in the case of 10-cent. He had a post out yesterday on his blog, Musings on Markets, that said he had bought some of the company's American depository receipts the day before. And, he's got a whole methodology that he lays out in this post. I decided for the chart to just do something relatively simple. Look at 10-cent's price earnings ratio in Hong Kong. The reason I pick Hong Kong as opposed to the U.S. is that, the company's been listed there longer. And in fact, if you look at the low in their PE ratio, well, you had the lowest level since February 2005.
Wow.
So we're talking about 16 plus years. And actually, it was the year before that Hong Kong trading in 10-cent began. So, it's about as cheap as it's ever been. So you can sort of understand where this call comes from. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
I'm just loving that 10-cent dime. It's just clever, Dave.
Yeah, that one really worked, Dave. I do wonder, though, and just very briefly, because I want to get to your stock of the day, this could go lower, and it could become even more of a value, and that's the concern that a lot of investors have who haven't jumped back into China.
And certainly he acknowledges that possibility in the blog. It could go wrong. It's just a question of sort of how does the Chinese government line up not only for 10-cent, but a lot of other companies? Ultimately, does it become less of a burden? At the very least, there's a potential for recovery if that happens.
Stay tuned. I feel like that story still has several chapters in terms of the Chinese crackdown and what's to come.
Yeah, that's certainly true. Okay, Dave, in just the last 20 seconds we have with you, give us your stock of the day.
Encino. This is N-C-I-N-O. The ticker is NCNO. It does financial software. It had quarterly results, revenue beating analyst average estimate in the Bloomberg survey. Oh, and they have a deal with Wells Fargo. They're going to work with them on their digital banking business. You put that all together, Encino up 16%. That's the biggest gain since the company went public in July of last year. And by the way, that day, it almost tripled.
Check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at The One Dave. Thanks, Dave Wilson, stocks editor at Bloomberg News.
It's like you're an auctioneer.
Let's go down to Washington, D.C. You got to check out the latest world and national news. Hey there, Nancy Lyons.
Hey, Tim. President Biden says his administration will make sure that federal dollars go to support those hard hit by Ida in Louisiana and now flood-stricken New York.
The president said the nation is here to help, and he addressed insurers who would pay evacuation costs only for policyholders who obeyed mandatory evacuation orders.
Insurance companies say, no, we're not going to pay you what we owe you. They left their homes because they felt it was flee or risk death. So I'm calling on the private insurance companies right now, do the right thing and pay your policyholders what you owe them.
The president will visit Louisiana, where the federal government is helping with temporary housing and efforts to restore electric power. In Washington, Irv Chapman, Bloomberg Radio.
Cal Fire meteorologist Jim Dudley says fire crews are catching a break fighting the Caldor fire near South Lake Tahoe.
We lost the winds. It's a good day today to not have gusty winds up on the ridges.
Dudley says whatever winds they do see are terrain-driven that happen when the sun hits the ground. The 20th anniversary of the 9/11 terrorist attacks, a little more than a week away. During a virtual hearing today, the House Homeland Security Committee reflected on the lessons learned. Congressman John Katko represents New York.
Sadly, I feel that the country has lost the American spirit we saw in the days, weeks, and months following September 11th, when we put aside partisan differences and work together for the betterment of this great nation.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So this is actually, we're going to tee up and we're going to talk a little bit more about it because it's one of my gainers today. We're talking about Match Group. The stock is higher, pretty much holding on to its best levels of the day, up about 6.8%. Match Group is creating a fund to support employees impacted by Texas's new near total abortion ban, allowed to go into effect by the U.S. Supreme Court. That all happened and played out yesterday.
Yeah, and it's continuing to play out as the Supreme Court weighed in late last night, and we continue to hear reaction, not just from lawmakers, but from the president as well. The Dallas-based company Match, that is, which owns some of the biggest dating sites, quote, generally does not take a political stance unless it's relevant to our business. That's according to Shar Dubey. That's who wrote that in an internal memo to employees. Quote, but this particular law is so regressive to the cause of women's rights that I felt compelled to speak publicly about my personal views.
Now, Dubey became CEO last year. She immigrated to America from India over 25 years ago. And this is a quote, and she said about that when she came to the U.S. about a quarter of a century ago. She goes, I have to say, as a Texas resident, I am shocked that I now live in a state where women's reproductive laws are more regressive than most of the world, including India.
Wow, that is a statement. And Carol, this raises a really, really important point. The influx of companies and people that we've seen to Texas in the last decade, especially over the last 18 months, as many companies have said they are moving to Texas or they are opening offices in Texas. The question is, what do we start to hear from other companies about a law like this? Do we start to hear companies say, wait a second, we're rethinking our investment here because, hey, we can't attract talent in a place like this.
Right.
We don't want to support a regressive law like this. And we want to make sure that our employees and our customers know what we stand for. Do they do it, though?
Right. And yesterday we talked with Richard Edelman of the global communications firm Edelman, and they have a trust barometer and looked at what employees want, and they increasingly want to work for a company where the company's beliefs coincide with the employees' beliefs, and that they're going to pick jobs based on that. And this definitely plays into that.
I think more remains to be seen, especially also with the legal reactions to this as well. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. Stocks trading close to a record. Right now, the S&P is at 45.28, higher by 4, up by about 0.1%. Stocks have been fluctuating ahead of jobs data tomorrow morning that will shape bets on the path of interest rates. The Dow up 48 now, up 0.1%. NASDAQ higher by 4, little changed. The 10-year yield 1.28%. Spot gold down 0.2%, 18.10 the ounce, while West Texas Intermediate crude oil is up 1.7%, 69.74 right now for a barrel of WTI. Earnings after the bell include Broadcom, shares down now by 0.4%, DocuSign down 1.1%. Round up now by 0.3%. Recapping, stocks higher, could see records. S&P up 3 now, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, yeah, just about 11 and a half minutes to go until we wrap up the Thursday trading day. Definitely wrapping around, Charlie, noting that we are well off our highs of the session, Tim.
Oh, well, I should turn my microphone on. How's that?
It's been a crazy day. Bear with us, everyone.
Maybe the producers are trying to send me a signal.
No.
Stenivek, you're talking too much.
We want you.
Well, let's get to the drive to the close. Aaron Gannon is co-founder and CEO of Clear Harbor Asset Management with assets under management of more than $1 billion. He joins us once again on the phone from Stamford, Connecticut. Aaron, great to have you back on the show. How you doing?
Doing just fine.
Hey, help us make sense of.
Carol, doing well.
Yeah, we are doing well.
We're hanging in there.
Yeah, thank you for saying that. It's been a challenging 24 hours in the tri-state area, certainly, for many of our friends and colleagues. We're thinking of them. Aaron, I want you to take us into today's trade ahead of the jobs report. It does seem like investors are kind of stepping back and certainly looking to what happens tomorrow. What are you looking for?
Well, clearly there's a big question around the trajectory of employment, but I also think that we've just gone through a very strong earnings season. We've had the majority of companies experiencing robust top and bottom line growth, and markets are sort of at all-time highs, at least the S&P 500, that is. And so I think there's some indigestion clearly in the market, but there's also sort of a forward-looking process that everyone is undertaking right now, not only as it pertains to the data tomorrow, which is important and could weigh on the Fed's thinking in September, but as it pertains to growth. And our expectation is that growth is going to continue to decelerate from very lofty levels, and that the bond market has, really sniffed this out many months ago, back starting in March when yields peaked. And I think there's a concern that as growth decelerates, so goes the market. But I'd also push a little bit back on that sort of prevailing view. Our thought is that we've already seen a significant rotation within the equity market out of sort of that pro-cyclical move that we started to see back in mid-June and play itself out when oil peaked to a more growth posture going into the non-farm payrolls on Friday.
What's interesting is I like what you said about indigestion in the market, because it does certainly feel that way. At the same time, the world is awash in liquidity. And our Gina Martin Adams comes on consistently and says that money's got to go somewhere. And you increasingly see it, or continually see it, go into the U.S. equity market because, again, the U.S. economy has certainly bounced back first if you compare it to the rest of the developed markets. And that's where investors seem to be continuing to place the bets. And I guess right now we have to figure out how long that kind of trade also continues.
Right, yeah. And I think as growth does decelerate, that trend towards growth equities and perhaps more defensive segments of the equity market like healthcare could still accrue to the U.S. market, perhaps more than the international international developed markets. If you just look at the sort of constituencies of those markets, we have more tech than for example, the Eurozone. And so if that trend prevails, it could just sort of accrue to the U.S. marketplace. But I also think that sometimes not making a big bet on cyclical versus growth is not a bad idea from time to time, and this may be that moment. You know, we've already had this sort of front half of 2021 massive cyclical move higher, oil, industrials, materials, banks, all outperforming the technology sector, for example, consumer discretionary and communications. And in the last 2.5 months, we've seen the opposite play out. And the back half of this year, I think, may be one where we continue to see that trend, but it will not be as robust as just the last couple of months.
But that's to be expected, too, to be fair. I mean, Morgan Stanley kind of came out with some expectations talking about a U.S. slowdown in the third quarter. I mean, that is to be expected compared to, right? Because the dynamic, crazy numbers of growth have happened as we bounce back from the pandemic. And I'm sorry, Tim, for cutting you off.
No, go ahead.
But I mean, right, it's kind of playing out like we expected in many ways.
Yeah, but if we were talking a month ago, Q3 growth was probably a 1% percentage point higher than it is right now on expectations.
Okay.
And so they've come down even further. And the question is, will we continue to see a ratcheting down in growth expectations? I suspect we could. We saw the ISM data, disappoint. We're seeing growth slow in China, both sort of export-driven growth as well as consumer-driven growth. In fact, there is a belief that the central bank wouldn't be moving to sort of shore up their currency, and now there's a belief that the central bank will be much more incrementally dovish. So that has huge implications for global currencies as well as equity markets.
How are you deploying capital right now? How are you putting money to work from clients?
Good question. Every one of our clients has a different sort of risk profile, a different objective, different duration as well, depending on whether or not they're a non-for-profit organization or an elderly couple or a young professional. And so we really take all of that into account in trying to sort of structure portfolios. And so equities, Tim, tend to be at the sort of core of a portfolio, but we also believe in the idea of allocating for particular clients that are averse to having portfolio volatility to the extreme, allocating to anti-fragile assets or assets that can sometimes buttress a portfolio when the economy and the equity markets are not performing well. So that could, depending on the moment in time, include gold. It could include components of the fixed income market like longer duration or short duration treasuries, as well as investment grade credit, mortgages. So our view is that treasuries still have a role in a multi-asset class portfolio, even though they are unfortunately yielding a negative level at the moment. So, for example, tomorrow's non-farm payrolls report comes in and it's at 200,000. We're not so sure the equity market behaves all that well tomorrow under that scenario.
Why?
That would be so weak.
725 is the 725,000 is the estimate, according to Bloomberg.
Right. So if it was an extraordinarily weak number,
right,
it could, this is how counterintuitive the market is today, though. But in theory, there could be some market indigestion there. But on the other hand, we could see the long-dated segment of the treasury market rally, and that could also afford the Fed to be even more dovish. So then, we could see equities, in fact, rally on the heels of extraordinarily weak economic data, right? So it's just an interesting time to be an asset allocator.
Well, it's that movie we saw for a long time, I feel like, Aaron, after the financial crisis. Bad news was good news. It meant the Fed was going to stay easy for longer. And so, I always think about this with the economic news. At some point, we want the economy to get back to normal. Normal is good. But the investment markets don't always see it that way.
Right. Absolutely. And we do see opportunities within equities across multiple sectors, but whether it's artificial intelligence or the renewable sector of the economy, water utilities still look extraordinarily interesting to us. They're just still wonderful companies in the midst of a market that's trading at 20 times forward multiple and doesn't look exceedingly attractive, that are continuing to grow at 30, 40%, revenue growth on an annualized basis. And the question, of course, comes down to price.
All right, we got to run. Hey, Aaron, have a good holiday weekend. Aaron Kennan, co-founder, CEO of Clear Harbor Asset Management, over $1 billion in assets under management, on the phone from Stamford, Connecticut. Just a few minutes left in the trading session. We're bouncing off our lows of the day, but we are definitely off our highs of the day. And I would say the Dow is a bit of an outperformer on a percentage basis. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube, counting you down to the closing bell on this Thursday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Now we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Sonali Bassick in for Caroline Hyde, counting you down to the closing bell. Here to help take us beyond the bell, our global simulcast, Carol Masser and Tim Stenovic, both here today, bringing together our Bloomberg television, radio, and YouTube audiences. Carol, this is an interesting day here because you have a little bit of stasis here. Maybe people are waiting for that payrolls report, or maybe they're just freaked out about something else.
Maybe they're freaked out. I mean, I can't kind of make sense of it. I feel like, is it Friday yet? Because there's been so much going on. But I do think there's a bit of a wait-and-see mode for tomorrow's data report. Remember, though, it's going to be backward-looking, and the Fed's going to be looking for trend lines, Tim, and they also want to make sure that we're working off those 7 million Americans who are still out of work.
Yeah, backward-looking is right. And the important thing to keep in mind here is it's still a time that reflects the summer, when kids aren't back at school, when perhaps many parents who didn't have childcare options during the pandemic, who weren't working, didn't get back onto the sidelines yet. So I think that's important to take into account. And then also, of course, taking into account, Sonali, the unemployment benefits that in some states have yet to expire, have expired now, and we won't see that reflected until next month's jobs report.
Yeah, absolutely. Let's call it messy Monday. You have the jobs report tomorrow, but then that unemployment benefits conversation, that on top of evictions, you can imagine traders coming back from their Labor Day vacation and parsing through a lot of data that will be hard to really...
I'm not working on Monday. I don't know about you.
No. Tuesday.
Okay.
Tuesday is the day.
And Romaine, we know that you're so keenly focused on these equity markets. We quickly just talk about the uncertainty, then the cues that we're getting within the bond markets as well. It is stable. We are unch on the day.
Yeah, we've been all over the map here on the indices here, and it's going to be a relatively unchanged day. Right now, for those of our viewers out there, you're seeing green on your screen. For those of you sort of listening to us on radio right now, here's the setup right now. The Dow Jones Industrial Average up about 130 points or so, up about 0.4%. The S&P 500 up about 13 points or 0.3%. The NASDAQ composite right now is higher on the day by about 22 points or 0.1%. Though we should point out that the NASDAQ 100 is actually going to finish the day in the red, down by about 7 points. The outperformer on the day, at least on a relative basis, I'm going to give you two outperformers actually. You got the Russell 2000, which is up about 0.7% here on the day. You did see a little bit of rotation back into some of those cyclical names. That was also evidenced, Carol, by the Dow Transports, which moved higher today, up about 1% on the day.
Yeah, I had the small caps up on my screen as well. Mid caps also doing fairly well, up about 0.4 as a group overall. What's interesting is you did see some buying on the S&P and the Dow into the close, so we did see investors kind of moving in those last few minutes of trading. Having said that, if I look at the S&P 500, 375 names higher. We had 120 losing some ground today and 2 unchanged. So we did see more of a risk on trade if you start to dig into how many gained, how many lost today.
Yeah, Carol, and I really love that you brought up some of that reflationary trade when you said you were focused on that Russell 2000, because you really see that on a sector level for the radio audience. We're taking a look at the sector winners, the sector losers. It's a cyclical trade underway. It is energy, right? It's capital goods. That's up anywhere from 1 to 2.3%. You're throwing in some food and some staples in there as well, but we'll digress. For some of the losers, this is an interesting story as well. You're getting auto and auto components, some of the software and services, and then media, I would argue, Carol, it's down 1%. That was really what was weighing on some of the indices today.
All right, and let's get to some of the gainers here. Let's kick around Netflix, because that stock was up about 1.1% in today's trade, rallying to an intraday record. Citigroup raising its price target to $5.95 from $5.70. Stock closed at $5.88 and change, saying that it continues to have strong pricing power. That stock 6 days of gains, so we definitely did see a move up there. Virgin Galactic, gotta mention it because it was a gainer earlier in the session.
Keep an eye on these things.
I know Tim is like master. Tim's like master. You have to get it off the list. I'm like, I'm not because it was.
I told you.
It was up 7.4%. It ended down.
I told you, Carol Romaine was going to give you a hard time.
Carol, did you hear about this flight thing? They deviated from the flight path.
I mean, you don't do that. You're going up into space. You don't do that, right? Check. There's a checklist. So anyway, so the FAA is not going to allow Virgin Atlantic to fly again. So they've got to work some things out with regulators. And I just got to mention,
they'll have to give refunds to people, like if they took them on a different direction.
Yeah, it's like, wait a minute, this isn't where we were going. I thought we were going towards this moon.
They've been waiting for a decade already. They can wait a little more.
I need to mention Match Group. It was up 6.1% today, top in the NASDAQ 100. Show of corporate activism, Match Group creating a fund to support staff impacted by Texas' new near total abortion ban.
All right.
So,
Tim up now with 2 decliners, 1 gainer.
Yeah, how do I follow that?
For you.
So I want to talk Chewy. That was one of the stocks that I kept my eye on today. We talked about it a lot yesterday, finishing the day down more than 9.2%. Of course, sales outlook and guidance yesterday missing expectations. As a result, though, we saw price targets trimmed by Morgan Stanley, Barclays, JP Morgan, and Jefferies, all as a result. Shares down going into yesterday's session, 2.7% for the year, but still up, more than 200% since the start of 2020 as consumers bought for those pandemic-induced lockdowns and to take care of those pets. American Eagle, keep an eye on that too, down more than 10%. Shares the retailer plunging today after Q2 sales missed estimates. Shares still up, though, 35% year to date. Hormel Foods, people are not eating enough Spam, or maybe that Spam is just getting more expensive. They make Skippy, Jennie-O, Planters, and more. Declined the most intraday since November, down 4.6% at the end of the day. The company cutting its full-year forecast, saying there was a significant inflationary pressure in nearly all areas of the business, including raw materials,
Skippy
packaging,
and
freight, labor, and other inputs. I know, the Planters is relatively new, too.
It's synergies if you count the peanut butter machine upstairs where you press the button and all of a sudden the peanuts turn into like live peanut butter. It's pretty incredible as long as the machine works, Tim. Don't break my machine.
There's no monocle,
I
Mr.
have
Peanut
tipped
up
that
there.
machine upside down and get my peanut butter out because I want it.
So let's just quickly take a look at yields. It's not nearly as exciting as some of the winners and the losers that our radio co-anchors so nicely do for us here. Pretty unch on the day, I have to say it. Stable, 21.77, 129, and a 1. Not even really a 190 here as you go all across the curve. But this really, Carol, sets us up for, this stasis, right? And some of the pause button that we're seeing before that ever more jobs important data that we are looking forward to tomorrow morning.
Oh, there's a report tomorrow? I haven't heard about it. Yeah, it's the monthly jobs report. We know it's always important. And it is certainly going to shape maybe potentially how investors think about the trade going forward. And you got to keep in mind, those Fed officials are going to be looking for a trend line. Are we getting more people back to work? And then whether or not how they assess the jobs market, there's a lot of debate about whether or not they're doing it correctly.
Yeah, and the ranges that we're getting from economists are all over the map. You got a high of about 1 million. In fact, there are several people that are sort of clustered right around that 1 million mark in the 900s. Of course, the average right now is 725, and then you got a couple lowball estimates that are down in the 400,000 range. But remember, last time we were making fun of those people. Carol, I think that was that March or April report.
Yeah.
And of course, it turned out those people in the lowball ended up being close to right.
Yeah, exactly.
Yeah, but let's
So you
also
gotta be careful.
be clear here that a lot of the reason we're talking about jobs is not only because of this recovery, but also because of this talk about the taper. And, you got to wonder, how fragile is this market when it comes to that taper talk? And then you throw in Manchin on top of that, and then you bring in all this political uncertainty into the last few months of the year.
Yeah, Tip, this is really interesting, right? The divergence that we see, and we heard this from Tracy McMillan over at Wells Fargo Investment Institute today as well, that a taper, as we know, is a very distinct and separate issue than any sort of rate hike. And Powell, I think, really laying that out at Jackson Hole. And so you do wonder about anything that could throw off a rate hike that we learn tomorrow that is a very separate issue from a taper plan that we think is already underway for later this year.
Well, I got an eye on Hewlett-Packard Enterprise, also known as HP, the company reporting earnings just now. The company sees fourth quarter adjusted earnings per share between 44 cents and 52 cents. That estimate's coming in at 49 cents, so really in line there. The company seeing third quarter net revenue 6.9 billion, estimates at 6.93 billion. The company's third quarter adjusted EPS at 47 cents versus estimates of 42 cents. The company seeing fourth quarter adjusted EPS 44 to 52, estimates at 49 cents.
Hey, speaking of earnings, DocuSign is also out. We're seeing that stock move in the after hours. Stock bouncing around a little bit. Second quarter revenue, $511.8 million. That's a beat, everyone. 485.5 was the estimate. Second quarter loss per share, 13 cents. The estimate was for a 35-cent share. That's year over year. Second quarter billings, 594.4, and the estimate was for 554.6, so a little bit better. And again, second quarter adjusted EPS, 47 cents, and that's 8 cents better than what the street was expecting.
Yeah, and of course, we're still awaiting, of course, results out of Broadcom here. Look for basically about 6.7 to 6.8 billion, in revenue on the quarter. At least that's what the street is looking for. But of course, more importantly, it'd be interesting to talk about that outlook here, that whole 5G rollout, and of course, the semiconductor shortage, how all of that folds into everything.
Yeah, and hopefully they're on the lucky side, Romaine. This earnings season is a tale of two cities. You see that with DocuSign. Strong response from investors. HP is not getting that same end of the coin. A lot of discerning here going on from investors in the market.
The one big question that we really didn't get to, Carol, was did you actually have one of those popsicles upstairs today?
I did not. I stay away from the ice cream.
Okay, it's not ice cream.
Oh, well, what is it? What is it? Frozen water?
Ice. Yeah, ice? Pretty much.
Did you stay away from them?
I could not.
Does everybody get ice cream?
It was a disappointment.
It's going to go away soon, guys, because it's the end of summer.
Oh. Well, what do we get in the winter?
Long peanuts.
Soup.
Getting more peanut butter machines.
All right, someone get Mike on the phone.
All right, guys, I'm going to go on vacation, so I will see you in a little while.
Vacation? Oh, congratulations.
Thank you. Have a good holiday weekend. And our team, though, will be back here again, taking you through the close. Same time, same place. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So the earnings continuing to come out. We just broke them down with our team over on the Bloomberg TV side. HPE is down 2.9% in the after hours. DocuSign, Tim, you and I talked about using it a lot during the pandemic. I don't think it goes away, but nonetheless, there's some disappointment after hours.
Yeah, there is. I don't think it goes away either. I mean, how do you go from
easier.
delivering, overnight packages of just contracts to sign when you can do it all on DocuSign?
It just makes sense. And we're still waiting for Broadcom to come out. So as soon as it crosses, we will break it down. You have a good night.
Oh, I'm staying with you.
Oh, that's right. You're staying with me. You're not going away. Yay. Let's get to world and national news. Told you it's a wacky day. Nancy Lyons, though, on top of it. Hey, Nance.
Thanks, Carol. President Biden says extreme storms like Ida are a reminder the climate crisis is real and the nation needs to be better prepared.
Past few days of Hurricane Ida and the wildfires in the West and the unprecedented flash floods in New York and New Jersey is yet another reminder that these extreme storms and the climate crisis are here.
Biden has spoken with the governors of New York and New Jersey. He plans to speak with the governor of Pennsylvania. He says he made it clear to them that the Federal Emergency Management Agency is on the ground. The president will be visiting hard-hit Louisiana tomorrow, where Ida made landfall. Wealthy Americans are scrambling for places to hide their money from the Democrats' plan to hike their taxes, and many on Wall Street think they found just the thing.
It's a niche strategy called private placement life insurance, or PPLI. As long as assets are held in one of those policies, they escape taxes. And when a policyholder dies, the heirs inherit those contents tax-free. The threat of higher taxes isn't the only thing sparking interest in this insurance. A little-noticed change in U.S. insurance law at the end of last year makes the tool more powerful. At the same time, the competition among insurance carriers is giving rich investors more flexibility, lower costs, and a wider choice of products. In Washington, I'm Nathan Hager, Bloomberg Radio.
The South Florida home, once owned by gangster Al Capone, is set for demolition. The Miami Herald reports the new owners paid $10 million. Capone paid $40,000. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser, Tim Stenovic here. Tim staying with me, which I'm so delighted that you're going to be here because we have some great stuff coming up. You lined up, actually, the interview with the the Vail Resort CEO.
Yeah, Rob Katz's going to be joining us in just a minute. That's one of the reasons I want to talk about this story, because we are going to talk a little bit about, or a lot about, climate change and the fires that are playing out on the West Coast. You talked about that with Charlie Pellet yesterday, and the way that ski resorts are helping to fight those fires using snowmaking equipment.
Which is incredible, smart thinking, and I know just trying to help out the situation in there. I have to say, I don't know if all of you have seen some of the pictures. I'm sure you have on news programs, certainly a lot on social media. And just seeing what's going on in South Lake Tahoe, it's just heartbreaking.
It is heartbreaking, and it's also an economic story, because it has to do with insurance, it has to do with recovery, it has to do with tourism. And as Dow Jones points out today, even though the West is going through this historic drought and we're seeing wildfires crop up each and every year, it's not stopping a red-hot real estate market in Northern California.
Which is so interesting, because I do wonder when insurers are going to say, you want to live on the coast, you want to live in California where the fires are, you want to live here or XYZ, we're not going to insure you.
I grew up in California. My family's in California. I love the state.
It's a beautiful state.
I wonder when things get so bad that people start leaving it in droves. And look, I'm not talking about the anecdotal evidence and the little bit of evidence that we have of some people leaving California, but look at what real estate prices are doing from Northern California to Southern California. People want to live there, and they want to buy property and buy homes.
It's interesting because it said, home sales tend to halt during and immediately after a wildfire event, More recently, home prices in California's wine country soared to record highs. Napa's median price was $900,000 in the second quarter of this year, up 23% from $695 in the second quarter of 2019. Sonoma's median price rose 17% to $785,000 during the same period. That's big jumps.
Yeah, it's big jumps. Look, it's the fifth largest economy in the world.
Yep.
California is responsible for bringing us so much agriculture throughout the United States and throughout the world. The question is, how do they continue to water and provide water, not just to people, but to agriculture there as well?
All right, so many questions. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting the latest quarterly numbers out of Broadcom. Its fourth quarter revenue forecast beat estimates. Broadcom reporting third quarter adjusted EPS of $6.96 a share. Estimates on Broadcom ticker AVGO was $6.85. So again, a revenue forecast beat out of Broadcom. Right now we're looking at shares of MongoDB. They're up more than 10% in extended trading after the database software company raised its full-year revenue forecast. Again, MDB on the ticker, they're up more than 10%. HPE Hewlett-Packard Enterprise delivered a weaker than predicted forecast for the current quarter, indicating its corporate and government customers aren't spending on computer gear as soon as predicted. Shares now lower by just about 0.5%. DocuSign boosting its revenue forecast for the full year. Turned out to be an up day on Wall Street. In fact, we did see records for both the S&P 500 index and the NASDAQ Composite Index today. S&P up 12, a gain there of just about 0.3%. The Dow up 131, up 0.4. NASDAQ, as I mentioned, a record up 21, higher by just about 0.1%. The 10-year yield 1.28%. Spot gold down 0.2% today. Spot gold 18.09 the ounce on spot gold. West Texas Intermediate crude up today by just about 1.6%, 69.70 for a barrel of WTI. This headline from the Bloomberg Professional Service: Reddit seeks to hire advisors for a U.S. IPO. That according to Reuters. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Rob Katz, the chairman and CEO of Vail Resorts, stepping down after more than 15 years as the company's CEO. He will stay on as executive chairman. He's going to be succeeded by Kirsten Lynch, the company's CMO, starting in just a couple of months, the 1st of November. Just some context here. When Katz joined Vail Resorts as CEO back in 2006, the company operated 6 resorts in Colorado, California, Nevada, and Wyoming. Now the company operates 37 ski resorts throughout Canada, the United States, and Australia. During that time, the stock has returned nearly 1,000%. It's an average gain of more than 16% each year, outperforming the Russell 1000 and Russell 1000 Consumer Discretionary by a wide margin. The stock up about 7% so far this year. Rob Katz joins us now in his first interview since the company announced that he's stepping down. He's joining us on the phone from Boulder, Colorado. Rob, thank you so much for joining us. I do want to talk about the CEO transition in just a minute, but I do want to start with the Calder fire that threatens communities near South Lake Tahoe. It was 25% contained as of this morning. We do know that the Kirkwood and Heavenly ski resorts are using snow cannons to spray water on the dry slopes and buildings. Give us an update about how things are going on the ground there.
Sure, absolutely, and great to be with you. And yeah, right now that's all of our focus is right now with our communities up in the Tahoe area. Clearly, our number one priority is making sure that we're protecting everybody in those communities, everyone who's been evacuated, making sure we're giving them support, sustenance, not only for our employees, but for anyone in those communities that in any way needs help right now. It's a very challenging situation. The fire is obviously doing significant damage. As of yet, it has not reached either Kirkwood or Heavenly, our 2 resorts in Tahoe, but it is close to both. And we are working closely with all the various agencies to do what we can to help minimize damage, particularly to the communities. That's obviously our number one priority right now.
Rob, when you see this play out, I mean, this is the visualization of climate change happening in real time. I know your company has been one that has for years talked about sustainability, focused on sustainability. After all, your business is dependent on it. What does it make you think of when you see this visual representation of it?
Yeah, I think it's something that we've been talking about for quite some time, which is that one of the challenges that comes with climate change is weather variability, more intense variability, and we've seen this whether it's with intense rains. By the way, it could be intense cold or intense snows during the winter, or intense heat, fires, drying. We think that this is a global critical issue, an emergency that requires global cooperation. Certainly our company is trying to do its part
We have a very proactive and bold commitment to zero, where we're going to, essentially be a net carbon zero company by the year 2030. And we've been active in lobbying and pushing for better U.S. and global cooperation on this issue. I think, whether you're looking at the hurricanes that are, hitting like Ida and the damage that it's doing, or the fires in California and many other places around the world, I think the cost of doing our part for climate change is far outweighed by the benefit of mitigating some of these other costs that come from these natural disasters.
Do you think net zero, though, for someone like yourself and a company that's been thinking about this and has made climate change a priority, Rob, do you think net zero is the way we need to think about it, or do we need to think about a way of not just being net zero, but actually doing something that improves the situation rather than just kind of being neutral?
Well, yeah, just to be clear, when we say net zero, what we mean is that we would reduce our carbon footprint to net zero from where it is today, and that would come from a combination of reducing our electrical and other fuel usage by, I think it would be 15%, I think, from last year. It would be, I think, something like 25 to 30% over the last 15 years, plus buying energy from renewable sources. So I think that is an approach that candidly could work around the world. I don't think we can reduce our energy use to zero, obviously, but I think we need to make a major reduction in our energy use and then also start shifting to renewable sources.
Hey, Rob, we're going to come back to you. We have 1 minute left with you now, and then we're going to come back to you, so stick with us. But I do want to talk about the CEO transition here. And why was this the right time to step away after 15 years at the company?
Yeah, I think it was the right time for the business. I mean, obviously, CEO transition always presents, an opportunity and some risk. And I think what the two things that had to be in place for me to feel like it was the right time for the company was to have the right successor who was ready. And Kirsten is an outstanding leader who's been at the company 10 years with an incredible track record, hugely responsible for the transformation that we've seen. And she's ready to take the reins. And two, the company needs to be ready. She has an incredibly strong team around her and our executive team with a lot of tenure. And the company's never been in a stronger position. So to me, it feels like it's the right time for that to make this transition.
Rob Katz, stick with us. He's CEO of Vail Resorts. He's on the phone from Boulder, Colorado. We're going to have more with him in just a few minutes. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
I know it's been hot and humid. I know we just are dealing with a terrible storm that we just got through. I would love to be skiing somewhere.
Yeah, so would I. I would
Out
always
in the
love to be.
open.
I would always love to be skiing somewhere.
You know, gorgeous mountain.
One of the reasons I was eager to book Rob Katz, who we're going to get back to in just a second, CEO of Vail Resorts, is after college, I spent 4 years living in Vail.
Being a ski bum? Oh, wait, did I say that out loud?
You know, I was kind of I skied a lot, but I was working very hard as well. But I got like 100 days a year in, which was amazing. It was so fun. You know, I wanted to get an update on the business, and Rob became CEO the year that I moved there. So,
all right, we'll continue.
Yeah, excited to chat more about that.
All right, we'll get back to him in just a moment. Let's get back to Charlie Pellet with some of the news after the close, Charlie.
Indeed, lots of news after the closing bell. Let us begin with Broadcom. It is one of the world's largest chip makers. It's out with a bullish quarterly forecast helped by demand for components used in corporate computer networks and smartphones. Shares higher, little changed, up by roughly 0.5%. Keep an eye on MongoDB shares. They're up 10% right now in extended trading. The database software company did raise its full-year forecast. Also reporting moments ago, HPE, it delivered a weaker than predicted forecast for the current quarter. Hewlett-Packard Enterprise indicating its corporate and government customers aren't spending on computer gear as soon as predicted. Shares are now trading lower by just about 1%. It turned out to be an up day on Wall Street, not just an up day. In fact, we did see some records here. The Dow, the S&P, NASDAQ, all advancing. Records on the S&P and NASDAQ. S&P up 12, up 0.3%. NASDAQ up 21, up 0.1%. The Dow up 131, up by 0.4%. 10-year up 2/32. 10-year yield 1.28%. Gold down 0.2, 18.09 the ounce. West Texas Intermediate crude up 1.6%, 69.70 a barrel. Wall Street, meanwhile, looking ahead to tomorrow morning's jobs report. Aaron Kennan is the CEO at Clear Harbor Asset Management. He was our guest right here on Bloomberg Business Week.
Clearly, there's a big question around the trajectory of employment, but I also think that we've just gone through a very strong earnings season. We've had the majority of companies experiencing robust top and bottom line growth, and markets are sort of at all-time highs, at least the S&P 500, that is. And so I think there's some indigestion clearly in the market.
Indeed, skiing cures indigestion. We've got the S&P up 12, a gain there of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, I want to get back to our guest. Still with us is Rob Katz. He is Chief Executive Officer at Vail Resorts, still with us on the phone from Boulder. Hey, Rob, I just wanted to ask you and just go back to the fire for just one moment. If your properties in Kirkwood and Heavenly, if they get lost to these fires in Tahoe, would you rebuild?
Yeah, at this point, I don't think, luckily the fire hasn't hit them, and we're hoping for obviously minimal damage, and we will, of course, repair anything that's damaged as soon as we possibly can to get them, immediately open for guests, both during the fall and certainly for the upcoming winter, and at this point, we're very much focused on a terrific winter ahead.
Does climate change impact any of your strategy, or how does it get incorporated into Vail Resorts' kind of longer-term strategy and thinkings?
Well, I think that, as we talked about before, certainly our commitment around the environment and reducing our carbon footprint, of course, it starts with that. But from a business standpoint, it really is about advanced commitment, and the season pass strategy that we've had over the last 15 years, which is really to get skiers and riders to purchase their skiing in advance of the season by giving them an incredible discount, an incredible value on the skiing. And I think, what's amazing is, our season pass price today is very much aligned with where it was about 12 years ago when we reduced prices 20%. And actually, of course, it's wildly below where it was right before we introduced the Epic Pass. And a lot of people look at that and they say, well, why are you doing that? And how could you make money doing that? And I think our strategy has been, we think if we give this incredible deal, one of the best deals in all of travel, to guests, that they will buy in advance, and that gives stability to both our company to our ability to employ and invest in the resorts and to our communities, right? So we think that it has been this stabilizing feature.
So I remember when you did that, I was living in Vail at the time. It was a really big deal because a season pass just for Vail was like over $1,000. And then this new Epic Pass came out that allowed you to ski everywhere for just hundreds of dollars. Rob, why the price reset back in March, the 20% price reset on all season passes?
You know, we saw a unique opportunity, I think, coming out of COVID. One, our pass sales did incredibly well, even in the middle of COVID. And so that gave us the confidence to really almost triple down on this strategy. We were kind of running around, pass revenue to our total lift revenue was about a little under 50%, and we have a goal to get it over 75%, and visits to even higher than that as a percentage. We really want people to essentially access our mountains with this pass, and our data told us that if we reduce the price, we would more than make up for it by additional people moving from lift tickets into passes, new people coming to our resort, making our resorts more accessible. I think, in the end of the day, we want to continue to see this outdoor experience grow, and making it more accessible is an important way to do that.
What indication are you getting that people are already doing that right now? The price reset was announced back in March. Give us some visibility into how this season is shaping up.
Yeah, we announced in June our spring pass sales were very, very strong, and we're very much in line, if not better than, a lot of our initial expectations. Right now, we are in the middle of what we would call our Labor Day deadline, where prices will go up after Labor Day. And so, we'll know more after this deadline and in our, September earnings release. But certainly, as back in June, what we shared was, we felt great about the strategy, and we'll know more when we talk about it later in September.
Got to ask you about labor jobs report coming out tomorrow. How tough was it to get workers this past season, and how are you alleviating that pressure for this coming season?
Yeah, I think clearly staffing is one of the biggest top concerns for us as we go into next season. One of the things we did was institute a $15 minimum wage throughout all of our western resorts and many of our eastern resorts, that's a pretty big jump. Last year we were probably just over $12 per hour as our entry wage.
It's a big jump.
So we knew that. We have a national and international effort that's very data driven, like our marketing effort for guests, to try and get employees to all of our resorts, and we're heavily focused on that. And it's really providing stability and a terrific employee experience to try and bring people to the resorts for the winter. And we know it's probably going to be one of the best recreation opportunities for everybody because it's outdoors.
Rob, no favorite child. Nobody has a favorite child, but where's your favorite mountain to ski?
Well, I do. I love them all, but certainly I've been skiing Vail Mountain now for a little over 30 years. So like you, when you moved there, no doubt it holds a special place in my heart, and the back bowls are somewhat incomparable. But each resort, it's one of the reasons why I think the pass has been successful. Honestly, each resort is different, and I think people appreciate that.
Well, we'll see you out there this winter. Rob Katz, CEO of Vail Resorts, joining us from Boulder, Colorado. Thanks so much, Rob, for taking the time.
And stay safe. We really do wish you guys well, especially out there in Tahoe. All right, let's get to World of National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, the death toll keeps rising due to flooding in New York, New Jersey, and Pennsylvania. Now there are nearly 24 deaths, many of them people who lived in basement apartments in New York City. Senate Majority Leader Senator Chuck Schumer from New York says it's a wake-up call that we need to fix the nation's infrastructure.
Woe is us if we don't recognize these changes are due to climate change. Woe is us if we don't do something about it quickly.
The storm started its assault on the U.S. in Louisiana, where more than 1 million homes were left without power. Slowly, that's coming back. President Biden plans to survey the damage there himself tomorrow. House Democrats have chosen Republican Congresswoman Liz Cheney of Wyoming to serve as vice chair of the special committee investigating the January 6th insurrection.
Committee members say that as they ramp up their investigation into former President Trump's family and members of Congress in connection with the January 6th riots, Representative Cheney demonstrated her commitment to find answers about that day and ensure accountability. Chairman Benny Thompson says Cheney's appointment underscores the bipartisan nature of the effort, although most Republicans have refused to participate. In Washington, I'm Amy Morris, Bloomberg Radio.
Far-right extremist groups like the Proud Boys and Oath Keepers are planning to attend a rally later this month at the U.S. Capitol to demand justice for the hundreds of people who've been charged in connection with January's insurrection. Capitol Police officials are now mulling over whether to reinstall a perimeter fence around the U.S. Capitol. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. Coming up, we're going to have a conversation taking a look at the future of Saudi Arabia specifically. And one story came up, has to do with COVID and what's going on. And it talks about Saudi Arabia now has the world's toughest vaccine rules.
Yeah, a phone app blocks the unvaccinated from getting back to normal life. And as a result, well, the vaccine rate is rising, cases are declining. But as you can imagine, Carol, resistance remains.
Yeah, this story, man, it's a great read. It's by our Vivian Naraim, and it talks about a security guard standing at the entrance to every mall in Saudi Arabia's capital, ready for a pandemic routine shoppers are getting used to, and that is proving their vaccination status on a government phone app that tracks their location at all times.
Well, so far, the policy is working. Vaccine uptake has soared since the rules were announced. New cases are declining. Google mobility data shows that workplace visits are down 6% compared to a pre-pandemic baseline versus 50% in Greater London. So people are going back to the office. But Saudi Arabia's experience also shows the limits of policies that exclude the unvaccinated from offices, from schools, and most public places, even in an absolute monarchy that criminalizes dissent. Implementation has not been easy.
And there's some criticism of certainly this policy, as you might expect. The Ministry of Health and the Government Center for International Communication didn't respond to requests for comment. Officials, though, have repeatedly stressed the safety and efficacy of the vaccines and said the requirements help protect public. This is, you know, the debate we have it on a different scale, perhaps here in the United States and other countries, but we know getting the vaccine brings down those vaccine numbers and those, or COVID numbers, excuse me, and helps protect the community at large. And yet there are a lot of people that say, wait a minute, you're getting into my private space here.
Yeah, the question is to what extent are they going to continue in other places around the world? For example, France has a vaccine pass that's now required to access a slew of public venues. New York City, of course, introduced mandatory immunization for teachers and civil servants. And anyone eating inside, have you had to show your vaccination stat? You know, I went to a restaurant. I went inside. Well, it was a bar, I guess, but I didn't have to show that I was vaccinated.
I don't think I have.
Yeah, I haven't had to show
That's
anyone.
really interesting because I've been places that say if you are vaccinated, you don't have to wear a mask, and,
like an
but they
honor
don't
code,
ask.
yeah.
It is totally an honor code.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on shares of Broadcom after hours. They're based in San Jose, California. Shares trading lower now by just about 0.9% on AVGO Broadcom. Stocks higher today ahead of tomorrow morning's key jobs report that will shape bets on the path of interest rates and the Fed's massive bond buying program. S&P up 12 today, a gain of 0.3%. The Dow up 131, up 0.4. NASDAQ up 21, a gain of 0.1%. 10-year up 3/32, 10-year yield 1.28%. Gold down 0.2%. 18.09 the ounce. West Texas Intermediate crude up 1.6%. 69.70 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie. Well, our next guest served as an American diplomat for 30 years in Washington, Bahrain, Saudi Arabia, Syria, Tunisia, and the UAE. Over that time, he spent 15 years specifically in Saudi Arabia working at the embassy in Riyadh and more. So Tim, has had a front row seat to the kingdom amid many changes there and in the world. Delighted to have join us David Rundell. He's former chief of mission at the American Embassy in Riyadh, author of Vision or Mirage, Saudi Arabia at the Crossroads, on the phone in Dubai, where it is almost, I believe, 1 a.m. in the morning there. So David, thank you so much for staying up for us. We've really looked forward to this. How would you describe today's Saudi Arabia?
Saudi Arabia today is going through dramatic changes. I've been involved with Saudi Arabia for 40 years, and I would say it changed more in the last 5 years than in the previous 35, politically, economically, and socially.
There was this time, 5-7 years ago, where Saudi Arabia has been, and they're continuing to do this, but really trying to transition away from depending on fossil fuels and create this knowledge economy, become a center for technology, and try to attract American companies. And it really seems like it got derailed a few years ago with the murder of journalist Jamal Khashoggi. And I'm wondering if that's actually the case. If American companies and companies around the world are not going to want to be involved with Saudi Arabia because of that.
I think that happened a couple of years ago, and it was a temporary event. We saw that a lot of companies didn't come for a year, and then they slowly began to come back. I also think that it was more of an American and European phenomena. It didn't really seem to affect, it certainly didn't affect investors from China and to a lesser extent from Russia. You asked me about the economic changes in Saudi Arabia. There really were three primary goals of the Vision 2030. The first was to balance the budget. The second was to diversify the economy. And the third was to create jobs. What derailed these things more than the Khashoggi murder was COVID. COVID sent everybody's economy into a tailspin, and the Saudis were not immune from that, as we certainly saw oil prices, which they do depend on, cratered. So the economic results of Vision 2030 have been a mixed bag. In some ways, they have been very successful, particularly in fiscal policy changes. In other areas, they have been somewhat successful in terms of diversifying the economy. They are making progress there. And in other parts, they've been less successful, significantly less successful, and particularly in terms of reducing unemployment, which has been hard to do in any country in COVID times.
You know, David, you said at the top that Saudi Arabia has changed a lot more in the past 5 to 7 years than it has in many years before it. For the better, for the worst? Can you, if you had to lean one way or the other?
That's a great question. Mostly for the better. Some, I would say, for the worst. The most striking better part is the social changes. And this, for your business-minded listeners, is part of the economic reform that's going on, in that no one is going to want to come and invest and live and work in Saudi Arabia when its cultural norms are so far out from the rest of the world. The young educated Saudis were leaving actually to move to Dubai or somewhere where they could be freer and have a more normal life. So in the last 5 years, there has been an earthquake, really, in terms of what happened in Saudi Arabia socially. Everyone knows that women can drive now, but there's so many other things that now they have movie theaters, which weren't allowed. Now they have plays. Now they have music. None of this was allowed. Now women and men can sit together in a restaurant, which they couldn't do before. And perhaps most strikingly, there's been a real affirmative action program to put women in the workforce, which is a big change, and to eliminate what was called the guardianship rules. And these were rules where a woman had to have permission from her husband or her father to do a whole range of things, to open a business, to get a bank account, to go to university, to get married, even to have a cesarean delivery. And by and large, those things have been eliminated now. So there's been a lot of social change for relating to gender equality. The other big change has been with regard to religion. And as you may know, there was a religious police force in Saudi Arabia. They've basically been taken off the street. They haven't been eliminated, but they're much less powerful. And the type of Islam that they're attempting to promote has become significantly more tolerant or moderate of other religions. So that's about it.
You know, Tim and I just had David Rubenstein of the Carlyle Group on, and he's got a book out too. It's been really kind of a fun afternoon for us. It's all about the American experiment. And he saw your book next to me and he said, does he have a conclusion? And is there a conclusion for you? And I think we just have about a couple minutes left here. And you were so right in speaking to our Bloomberg audience and our investor audience. Is there a conclusion for them when they look at Saudi Arabia, what the role of this country and kingdom will be going forward, the relationship with the U.S., what it does in terms of peace, fingers crossed, in the Middle East, difficult, especially here we are coming off Afghanistan. What would be your conclusion, or you hope is maybe a conclusion that people take away from reading your book? David Rubenstein or others?
Well, when I wrote the book, which was several years ago, when I started it, I did have a question of whether it was a vision or a mirage. I think it's pretty clear now that it is a vision, that they've put together a vision of how they want to change their country, and socially and economically they're trying to do that. And I don't think that they will be completely successful, but I don't think they have to be completely successful. They're not going to turn Saudi Arabia into South Korea. But really all they have to do is make their welfare state a bit more sustainable than it already is. And considering the fact that they have all this oil, they're going to have oil for some time. They are a very low-cost producer, so that when everybody else has shut in their wells, for whatever reason, the Saudis will still be producing. So the last barrels of oil commercially produced will probably be from almost certainly from the Gulf states. So I think they have a vision. In terms of what, and I think they'll be successful enough to sustain their stability.
And just about 20 seconds left. I'm so sorry.
For the United States, they remain a critical, important ally. In terms of oil, in terms of counterterrorism, and in terms of being a geopolitical base between Europe and Asia.
Well, David, I hope we can continue this conversation because I know there's so much to dig into, and really appreciate your time and for staying up late. Please be well and get some sleep. David Rundell, his book is Vision or Mirage, a longtime diplomat. It's a fascinating area.
It is fascinating. We can't forget that President Trump's first trip abroad was to Saudi Arabia, symbolic in many respects.
That's a good point. All right, we're going to have to get him back to really talk about that.
Thanks for staying up late, David. Appreciate it.
I'm going away for a little while.
Carol, have a great vacation. I will hold down the fort. Do not worry, okay?
I'm never worried.
I'm going to miss you, though. We're going to miss you.
I will miss you, too. I'll be back soon. Stay safe, everyone.